Good morning, everybody. Welcome back to another episode of The Market Open. It is Monday, September 15th. We are back. We are live, back to our regular schedule. I know the past 2 weeks have been horrendous in terms of the Market Open, market closes. It is sucked for me as much as it is sucked for you guys. But we're back. We're live. No more traveling. We'll be here every single day. Market Open, market close. And we're going to get this show back on the road. Good morning, good morning, good morning. Thank you, everybody, for being here today. There is a lot of stuff that we've got going on in the pre-markets, a ton that is happening. I mean, this has been quite a Monday morning to get started, to get back on the show. We've got a pretty ridiculous amount of news, to be honest, across the entire market. We've got, obviously, the Tesla news. That's big. We'll talk about that as our first story. Elon Musk officially buying Tesla for the first time in 5 years in the public markets. You've got Robinhood that just made an announcement like 5 minutes before we went live. We'll talk about that. You got Nvidia, China negotiations with the United States starts for the third time, or for the third round of negotiations. And obviously China has to say something crappy about Nvidia to tank the stock, to get Besant and Trump to be a little bit more friendly. That seems like what's happening. So we'll talk about that. And then to wrap it up, you got FOMC on Wednesday. We have FOMC on Wednesday. So in 2 days, we are going to have the most explosive FOMC I think of really the past couple of years. 25 bips likely on the table. We got a bunch of job numbers and inflation numbers last week. That gives us a chance for 50. I doubt we're going to get 50, but we need that 25. The market is priced for that 25, and we're going to see what the market looks like when we get that 25. So we got a lot to talk about. And then you got Trump tweeting. He tweeted a bunch of things this morning. Some things I just a little confused about. For example, he said companies shouldn't have to report every 90 days. It should be twice a year. Well, I don't. I kind of want to see what my companies are doing every 90 days. So I don't know exactly what inspired him to tweet that, but we'll talk about it, get into the implications of all that stuff, and keep going from there. Yes, he just tweeted about a TikTok deal as well, so we'll talk about that. Got a bunch of stuff happening. We will get into all of it for today. Now, I am in the studio downstairs in the apartment complex. Again, my studio in my personal apartment. First of all, Emir is sleeping in it right now, so I can't do the show because he's knocked out. But it's getting foamed out with the audio. We did one of the shows on Monday last week, and a lot of you guys said the audio was like almost perfect. So it's like getting to perfect. I think by midweek, it should be pretty damn good. But we're here today. This morning, Arny and Emir are still with me. I think they're going to come on the show probably in a couple hours, near 11 o'clock. They'll be on just to say hi and talk for a little bit. And then they're leaving back to Italy and Sweden today. So after they leave, we will officially be back to normal. And we'll keep going from there. Yes, I brought the bell. It's been too many days without it. So we got the big bell. We are back and we are ready to go. Dude, I am so excited. The past couple weeks have been amazing. Obviously, AIPCon, getting to the live stream with Carp. That was awesome. Robinhood Las Vegas event. That was amazing. But we're back to normal. Back to this is like my fourth day officially in the new apartment. So I can actually like live in my new spot, and we get back to the show. We get back to doing what we've got to do. So I'm very, very excited to be back. Thank you all for the patience over the past couple of weeks. I know it has been super annoying, and I do not take your attention for granted. And I know if you have a consistent routine and then you mess it up, like people get annoyed, and they might not care that much about tuning in. So I deeply, deeply appreciate everyone just sticking with me, and we're back to normal, so it should be fun. All right, let's get started. Good morning, good morning, good morning. Thank you, everybody, for being here. We got to get started with the first story today. I woke up at 5:30 today, so I woke up to get two of the biggest news stories this morning. First one was the Nvidia China one, and that was a big story. But then we had this story come out, which was bigger, and this came out about 30 minutes after the Nvidia stuff and kind of stole the spotlight for this morning. Elon freaking Musk bought 2.57 million shares of Tesla, worth about $1 billion, average price $389. He now controls over 413 million shares of Tesla, worth $176 billion, and the stock price on Tesla, again, I got in at $335 this year. Some of you guys have been buying the dip consistently. Some people have been waiting for it to come lower, but at least from my personal perspective, $335 is when I jumped in before Q2 earnings. 428, folks, were up 8%. Tesla did get to 402 on Friday. Then it closed a little bit below 400. And then last night it was above 400 for the first time since January 30th of 2025. And now we're at 428. So for those that have been diligently buying Tesla For those that have been DCing, for those that have had to deal with their portfolios underperforming, people that are heavy Nvidia or some of these, or even Google, right? Like, it's been annoying. I get it. I am not as heavy into Tesla as a lot of other people, but I can understand, why you would keep buying Tesla. It's the reason I bought Tesla at 335. It was like, hey, there's multiple S curves, robotics, FSD, and energy. It's hard to fade Elon, hard to bet against them. There's a little bit too much negative sentiment. So let's take a bet. Let's get in, even if the valuation is aggressive, given the earnings growth is not going to be there. Obviously, at 430, if the earnings growth is not going to be there, the valuation becomes more aggressive. But the street doesn't care. And the reason the street doesn't care today is because when a founder buys shares of his stock to the tune of $1 billion, I mean, it's hard to deny that. Now, obviously, the sort of nuance here is that Elon is getting $1 trillion pay package, and that $1 trillion pay package is something that he will achieve if he basically 10x the valuation or 8x the valuation. So buying $1 billion worth of stock when you're getting ready to get $1 trillion worth of stock, some people can say, well, that's peanuts compared to his overall compensation. But at the end of the day, this is the first time in 5 years Elon has bought shares, which means he's not buying at 389 because he thinks it's a horrible deal. He's probably buying at 389 thinking, okay, these S curves are about to converge. The earnings growth is not there yet. The earnings growth, he kind of guided for Q4 of 2026 to get there. Street's going to probably pull that forward before it gets there because it's freaking Tesla. Tesla gets the benefit of the doubt all the time. And most generational companies do, right? If the growth curve is there, the investors will pull the growth forward, the multiple forward. And as a result, you've got the stock that's pumping. Now, could this be a sell the news? I mean, yes. Like, we've seen Tesla get sold off on things that are less aggressive on this. But at the end of the day, I think if you're in Tesla heavy, the idea that Elon Musk is with you, not only from a compensation perspective in terms of his like level of ownership and his level of attentiveness towards the company, but also from the pure fact that he bought $1 billion worth of stock, it seems to be a bit more bullish than bearish. And obviously the earnings are probably not going to be the best over the next few quarters. Q3 actually is going to be really good because September EV credit's going away. And there's a lot of data to suggest that Model Y registrations in China, the pre-orders in China, the overall demand in the United States. You got Morgan Stanley coming out saying, hey, we think they can do more than 500,000 cars this quarter. Like, there's a lot of reasons to be bullish for Q3. Maybe Q4 doesn't carry that bullishness because the EV credit goes away. But regardless, the market has plenty of reasons to pump. And if you got the S&P 500 headed on its way to 6,800, 6,900, it's hard for Tesla to not participate in that rally. So it's exciting. It's very, very, very exciting to see. And I would imagine a lot of people that have been heavy in Tesla all year, you've been waiting for this moment. And this moment is officially here. So yes, congratulations to all Tesla shareholders. It is hard to bet against Elon. I mean, we're going to see at 9:30 when the market opens what actually happens. Does the market say, hey, like, cool, Elon's buying $1 billion, but the earnings still suck and we're selling it off? And this is just liquidity for, a bunch of people that have been waiting for this moment. Or does the market go risk on and say, wait a second, rates are coming down. Model Y large is doing great in China. EV tax credit ending is great, is great for Q3 demand. Elon basically said himself last week, he's done with the government, and he said the government is unfixable. So the idea that he's creating an American party, unlikely to happen. And now he's all in on just like focusing on the vision. And then you got the wild card of Optimus showing any progress in 2026. Optimus, to me, is the largest TAM for Tesla to really go after. That's what really, I think, can get them to $8.5 trillion, which is the high end of his compensation package. I mean, put all that together, you get a very, very exciting market opportunity for Tesla. So there you go. Congratulations to everyone. Tesla is getting some momentum. We'll see how the stock opens up at 9:30. I mean, if I had to guess, I would say the pump continues. I mean, this is a pretty aggressive move. Tesla's already added $100 billion in market cap in the pre-market. And I know the pre-market's not as liquid as when the regular market opens, but people are excited. And for the first time in 5 years, for Elon to throw his hat in the ring and say, yep, I'm ready to buy. But he doesn't need to. He has enough stock. He doesn't really, it's not like, he's like, I need $1 billion of stock at 389 because it's definitely going to 500 tomorrow. It's like, no, it's a signal to the market of like, hey, I'm bullish and I'm $1 billion worth of bullish. And I think that market is taking that signal very nicely. So there you go. That's what you got on Tessie 428 in the pre-markets. And we're going to see what goes on from there. Tesla stock now year to date, for everyone who is heavy in this one, your year to date portfolios obviously are going to change if we can maintain this momentum. It's up 12% now. If you add up the closing price on Friday with the pre-market move, it's up about 12%, which compared to some of the other Max 7s is nothing. And so maybe this run really is just beginning going into Tesla. Cool. All right. So that's what we got on Tesla. Now let's get into the Nvidia China news that came out this morning, because this was also kind of crazy. Market's not affected that much anymore, but it was down about 4% at the worst of it. Nvidia is facing new antitrust regulations from China's State Administration for Market Regulation, which found preliminary violations of China's anti-competition law. This is per the Wall Street Journal. Chinese regulators have not decided on penalties, but they have stated that there are investigations that will be conducted on Nvidia being a monopoly and violating antitrust laws. I think this is a nothing burger, and the reason I think it's a nothing burger is because these investigations are beginning as senior officials from the US and China meet again this week for trade negotiations. Nvidia has been trying to sell to China for a while. China has been pissed off for a while that Trump hasn't given them the export control clearances on Blackwell. Trump has said he would, but he's also a little concerned on if it's like the right time to officially do it. Nvidia, Jensen even said, hey, we'll give you 15% of the sales. Like, we'll do anything to just sell into China. Jensen guided for about $60 billion worth of revenue growth in Q3 if they're able to sell into China, which is what investors are really excited about. And that would, more than justify the stock price that it's trading at right now if they can put up that growth. But the week of negotiations for round 3 between the US and China, which we still don't have like a really, really official deal yet. Of course, China says, well, wait a second, we need some leverage. And to get that leverage, they start messing with Nvidia. So to me, I think this is more so a question of them saying, hey, when Chinese and US officials meet in Madrid today, they're going to be like, if you really want the ability to gain momentum in the Chinese market, and Nvidia needs that momentum to justify how Nvidia's been performing, then you guys got to give something up. Nvidia was down 4%. Now it's down 1.25%. So I think the market is overlooked. This Nvidia was at like 164 last week. Now back to 175, still down from 185 at the highs. But we're going to see later today in Madrid how the United States handles this new negotiating tactic that it seems like is taking place from the Chinese.
Becky, good morning. That's right. Officials are right now in their 4th hour of trade talks so far today in Madrid. They kicked off this morning around 9:15 local time, according to a senior U.S. official. Principals from the two sides also met for just about 6 hours yesterday, and lower level talks then continued into the evening. Tariffs and export controls, of course, top of mind for these negotiations, but so is TikTok. Its parent company once again faces a deadline on Wednesday to sell its U.S. operations. And Secretary Bessent this morning spoke with reporters and suggested that a deal on TikTok or an extension is not yet, at least, coming together.
In terms of the agreement, the overall agreement itself, our Chinese counterparts have come with very aggressive asks. We will see if we can get there. At present, we are not willing to sacrifice our national security for a social media app, and we will see where we get today.
Now, those comments come after President Trump last night told reporters regarding TikTok, quote, "We may let it die, but it depends. It's up to China."
So, we're going to see. Obviously, TikTok will probably be part of the negotiations today. You got Bessent right there talking about what's happening with the negotiations. Trump this morning tweeted, the big trade meeting in Europe between the United States of America and China has gone very well. It will be concluding shortly. A deal was also reached on a certain company that young people in our country very much wanted to save, TikTok. They will be very happy. I will be speaking with President Xi on Friday. I didn't see that. The relationship remains a very strong one. All right, so Trump confirming right there that he will be speaking to Xi Jinping on Friday. Hopefully that leads to some implications of getting TikTok or a deal on TikTok reached. And then, obviously I think if China wants to get any leeway on TikTok, they're going to have to give us some leeway on Nvidia and not like investigate them for being a monopoly or something. So I think it's a negotiating tactic. The market probably sees through it, and it shouldn't be the worst thing in the world. Now, SoFi actually is breaking, folks. Wow, 27 in the pre-markets. My goodness. Shout out to SoFi doing its thing. It looks like it has a date with Destiny, and Destiny might be 30 Dolores. 2707 on SoFi, up 1.96%. Obviously, we'll talk more about rates coming down this week, but as rates do come down, SoFi should be a major beneficiary of rate cuts. And so it would make sense for the market to kind of price that in, and I think that's what we're seeing right now as well. Lords, thank you for the $100 super chat. It's 9 p.m. The party goes till 4 a.m. There's a couple of charts I will show you guys about data centers and CapEx that continues to, I think, reinforce the thesis that the party is around 9 p.m. And, the party does have a bit more time before it ends. And that's why I think this bull market also continues, led by this like AI tailwind that does not seem to be slowing down. Now, BM&R, we'll get into some of the macro stuff, but real quick, BM&R, that's down about 2.5%. For those wondering why BM&R is down, I think you have to remember, again,
this is a volatile stock. This is not a stock that's going to have like earnings growth. And then once that earnings growth is factored in by the market, all right, it's up 10%. It's going to stay at that 10%. If Ethereum goes down, which it did go down over the weekend, it was at like 4,750. Now it's at 4,500. I mean, quite literally, Ethereum's down 2.65%. BM&R is down 2.7% this morning, or 2.4%. So if you want to be in this name, you have to be ready to embrace the volatility, and you cannot complain. And I'm talking to myself because I'm heavy in this name as well. When it goes down 2%, when it goes down 10%, when it goes up 10%. I mean, there's a way to yield the volatility off this name via covered calls or via, puts, any type of strategy. But there's also a way to just be levered long ETH, and you have to be okay with ETH going down and realizing that Bitmine will go down. So I just don't think there should be that much concern on Bitmine's intraday 5-10% price movements, because it could go down as easily as it goes up. It all depends on Ethereum, and it begs on the question on how bullish you are on Ethereum. Now, Bitmine did release a press release this morning. They have $10.7 billion, including everything, which is about 2.1 million ETH, 196 Bitcoin, 569 million of cash, and their stake in Orbs, which is that WorldCoin treasury that they bought, is about $214 million as well. So about 10.7 billion is your net asset value. This is the 28th most traded stock in the United States, trading $2 billion a day. Again, that liquidity is obviously very important for BM&R as well. So that seems to be the update we got on BM&R, and we're going to see what happens later throughout the day as the market opens. CoreWeave is up 9%. Okay, what is happening on CoreWeave? Yes, they're trading at about a 1.4 million or 1.4 MNAV right now. Given I think the current NAV, Anand, correct me if I'm wrong, I think it's 43. That's what I saw. It was 38 on Friday. Now it's 43. I might be wrong, but I think it's around that 43. Okay, CoreWeave is up 9%. I don't know why. Let me see if I can find out. Did they get a $20 billion deal with Microsoft as well? Let's see. CoreWeave disclosed in no, that's old news. I don't see anything. Wow, 10%. I don't see anything. Something with Nvidia? No. 12% now? Dude, no one has it. If you guys had it, you would have put it in the chat by now, so I don't think anyone has it. Something's got to be breaking on this guy. What is going on? That's like if it keeps pumping, there's got to be a deal here. Are they buying TikTok? Is that what's happening? Deal with Nvidia? CoreWeave entered into a $6.3 billion agreement with Nvidia. Oh boy. Okay, what exactly? Let's see. 6.3 billion. Is that Nvidia giving them 6.3? CoreWeave enters into a $6.3 billion agreement with Nvidia. Into a new order form under the Master Services Agreement. Under the terms of the agreement, in instances where the company's data center capacity is not fully utilized by its own customers, NVIDIA is obligated to purchase the residual unsold capacity through April 13, 2032. Okay, the company's determined that this looks like an agreement for NVIDIA to backstop any additional capacity of GPUs that CoreWeave has. Under the terms of the agreement, in instances where the company's data center capacity is not fully utilized by its own customers, NVIDIA is obligated to purchase the residual Wow, okay, this is interesting. So over the next 7 years until 2032, NVIDIA is obligated to buy at least 6.3 billion of GPUs if CoreWeave can't sell them themselves. Yeah, it's basically a put option for AI compute. This kind of feels a little weird, though, because it's almost like CoreWeave is saying, hey, NVIDIA, if we can't sell your product, you have to buy it back from us. And NVIDIA's probably like, okay, sure, because NVIDIA doesn't want CoreWeave to not buy more of their okay. So the way I'm understanding this right now is CoreWeave saying, hey, we're going to buy a bunch of your product, your GPUs. We're going to help your numbers. But if we can't sell it because of whatever reason, you have to buy it back almost. And I think NVIDIA's like, sure, we have enough belief that you guys will have demand for reselling our GPUs because the demand is exploding as per Jensen, that we won't have to buy back this 6.3 billion, but it's a put option in case you guys can't sell at least 6.3 billion worth of GPUs. It's kind of like insurance. Yeah. It's kind of like a GPU buy. It's a this is the 8K that's filed. It kind of, I don't know. It doesn't feel the most bullish for them to enter into an agreement. If I'm understanding the agreement correctly, that's what it sounds like. We'll get some more updates on it. But obviously the street's, pumping it up because they're like, all right, if essentially the street's saying, okay, so 6.3 billion worth of material will not go into depreciation or expenses or be CapEx that doesn't have an ROI, because if anything, CoreWeave will break even on it just by selling it back to Nvidia. Okay, so that's one thing that's breaking right here. APLD, that is up 7% as well. You guys are saying UK deal. Let me see what's going on with that as well. But that is the 8K from Nvidia and CoreWeave. And then right here, CoreWeave is reportedly set to announce a major investment in the UK next week. So Jensen's going to be going to the UK with Trump this week as well. So some headlines right here saying CoreWeave is expected to make an announcement. Did they already make the announcement? If they did, that would also explain some of this momentum. Saturday, UK and USA signed a multi-billion tech partnership. It positions quantum computing as a key pillar for advancing secure cutting-edge applications. Okay, so that's some of the stuff we have in regards to quantum, which is also pumping in the pre-markets, but it doesn't look like a specific CoreWeave United Kingdom deal. Okay, cool. So that is what we are looking at. Archer's up 7.5%, Joby's up 5%, and CoreWeave right here getting some momentum. Yeah, definitely beneficial for CoreWeave, exactly. Not sure if it's going to be exactly beneficial for NVIDIA. But I think NVIDIA is just like, yeah, we're going to guarantee that we'll buy your stuff just in case, which is not that big of a deal. Potentially for CoreWeave. Okay, cool. So that's what we got. CoreWeave right there up 9%. The headline is NVIDIA's backstopping $6.5 billion worth of trades of GPUs in case CoreWeave can't sell them, which feels bearish NVIDIA, but it's also bullish because maybe NVIDIA is just like, hey, we know you guys are going to be able to sell them, but if you can't, which we don't think is going to happen, we'll backstop it by 2032, but we think you guys will be okay. So kind of just like reassurance by NVIDIA, if anything, which I think is bullish for the broader market. Google right here, 244. Wow, Google, new all-time highs in the pre-market. SoFi, 2708. Tesla, 427. Palantir, 169. NVIDIA again, 175. And then you got Robinhood, 115.57 is what we have in the pre-markets. Okay, not too bad. Brandon says, I have 55 covered calls on Rock Lab expiring Friday. Should I wait till Wednesday to see how this moves? Yeah, I mean, I would wait till you get to your break even. Once Rock Lab is above your break even, then I would roll those on those 55s. And you could just roll them next week and keep them at 55 or try to get to 56, 57. But yeah, I would wait until you see it get above that break even price. Okay, cool. Let's move on to Hood. So we got some Hood breaking news that came out right before we went live. And again, this is a reason that this company is just not stopping. Rock Lab right here as well is at $54 in the pre-market. I don't think there's any news on Rock Lab, but that one is up another 2%. It had a monster move on Friday. So this one now continuing to gain momentum. Robinhood is just not stopping. So here's what they announced, folks. Robinhood Ventures has filed to go public via IPO. Robinhood Ventures has filed to go public via IPO. Now, what is Robinhood Ventures? That is a good question. Well, basically, Vlad came out today and said, hey, retail investors don't have access to the majority of private markets that exist. That's kind of their thing they're trying to solve with tokenization. And as a result of that, we are going to try to kind of switch things up. So what's really interesting about this, and let's take a look at this right here. Vlad says, for decades, wealthy people and institutions have invested in private companies while retail investors have been unfairly locked out. With Robinhood Ventures, everyday people will be able to invest in opportunities once reserved for the elite. This is going to be a new wholly owned subsidiary of Robinhood Markets called Robinhood Ventures DE LLC. It's a closed-end fund that aims to offer retail investors exposure to companies at the frontiers of their industries. RVI is the ticker symbol, as it will be going public. And essentially, Robinhood's press release says, hey, we want retail investors to get access to some of these companies that have yet to go public but deserve to be traded. They said the number of publicly traded companies in the U.S. has fallen from 7,000 to about 4,000, shrinking the number of investable opportunities for retail traders. At the same time, private companies are growing in number and value, with the estimated value of these firms in the U.S. now surpassing $10 trillion, Robinhood Ventures aims to expand access to this important and often closed off part of the market. I love this. This is amazing. So the reason I think this is really cool is because at its core, Robinhood's saying, hey, we want to tokenize SpaceX, Anduril, OpenAI, Stripe, etc., but we can't do that in the United States because there's still accredited investor laws, which is very difficult for the United States well, it's not difficult for them to fix. They just haven't got to it yet. And I don't know if they'll get to it in this administration, but you have to be an accredited investor, $1 million net worth, $250,000 income for the past 3 years to be able to properly invest into OpenAI and SpaceX. In Europe, those laws don't exist, which is why they've been able to do what they've been doing through tokenized assets in Europe. And that's why they have the entire event in France. But if Robinhood were to buy SpaceX, OpenAI, Stripe, all this stuff just in their own fund and then take the fund public, which is, we've seen many startup companies, startup funds do that. ARK has a venture fund. The problem with ARK's venture fund is when you look at the companies, they're just like not the best companies in the world. If Robinhood can get the most elite startups, and I would imagine Vlad's connections would help him get opportunity to be able to use Robinhood's vehicle to invest in those startups, Stripe, Anduril, Opendoor. It's not Opendoor, but maybe Opendoor is on its way to becoming an elite company. If that was a subliminal benefit for Opendoor, but a Discord, etc. All these different companies that are not public yet, if they go public, or if Robinhood's able to buy a couple $1 million worth of them, and then and their valuations go up, and then they can be traded. I mean, you never know. That could be very bullish for just overall Robinhood clientele that want to make money on it. By the way, Opendoor right here up about 5%. In the pre-markets. Wow, SoFi 27.18. She is taking off. Hood right here 115.67. Google as well taking off 244. Not that bad. SoFi really making a move. So the argument here is if Robinhood can have an actual venture capital fund and get it to a couple $1 billion and have that be liquid, that retail can trade up and down. So if OpenAI announces a new funding round and Robinhood has like a 10% position of the fund in OpenAI, then boom, you have more momentum for the broader ecosystem. Now, how's Robinhood going to make money off this? Management fees. They are going to make a killing off management fees. That is the number one way these venture funds or any of these funds that go public make money. And they can probably charge a more excessive venture fee or a management fee than like a regular ETF because they're giving you access to companies that don't really exist. Or don't really exist in the public markets, right? It's not easy to get Stripe shares if you're a regular retail investor. So I think this is super bullish. I think this is just another way that Robinhood is going to try to implicate themselves into the broader landscape of private markets. We know Vlad really wants those to go public or at least tokenize the shares if they can't go public. And so it seems like this is just another vertical for Robinhood to get some more momentum into. We'll talk more about Robinhood towards the end of the stream. I'm actually going to write up something soon about my takeaways from the Hood Summit. I mean, just TLDR, I think Robinhood's going to $1 trillion. I didn't think a couple months ago they could actually get to $1 trillion. And based on what I saw at the Hood Summit, and there's one feature in particular I don't think enough people are talking about. I think it's going to $1 trillion. And I think it'll be a long journey, but the journey to $1 trillion begins for Robinhood. And I really do think it's possible. So we'll talk more about my thoughts on that summit as well. For those that are just joining, the reason CoreWeave is up right here is because they've entered into a $6.3 billion agreement with Nvidia, giving Nvidia the rights to purchase any unused capacity through April of 2032. It's almost like a put option that CoreWeave got into with Nvidia that if they don't have their GPUs being sold in the next 7 years, Nvidia will backstop it, which is kind of bearish Nvidia, but it's definitely bullish CoreWeave because they don't lose $6.3 billion. But it's also bullish Nvidia because they're basically saying, hey, we kind of think that you're going to be able to spend this. You're going to be able to sell these GPUs, and we're willing to spend money to backstop it because we have enough faith that the demand is high. So that is why CoreWeave is up. PayPal, wow, we got some breaking news right here. PayPal's integrating Bitcoin and Ethereum into its new peer-to-peer payment system. Okay, PayPal stock. I was talking with Emir about PayPal yesterday. PayPal's up a little bit. He told me PayPal's going to double in 2 quarters. And I don't know, he'll be here a little bit later on the show. I don't know if he was BSing or if he was serious, but he sounded dead serious. I was like, dude, if PayPal's going to double in 2 quarters, I should buy like 1,000 shares right now. And he's like, no, I think it's going to double in 2 quarters. I'm like, I think it could double. I don't think it's going to double in 2 quarters. He's like, nope, it's doubling in 2 quarters. So we'll get some of his thoughts on what he thinks about PayPal. But look, the incorporation of Bitcoin and Ethereum into its peer-to-peer payment system, this just continues to prove the bull case for crypto. I think if you are going to be investing during the Trump administration and you read the Genius Act, it is pretty obvious Ethereum, at least from a tokenization and stablecoin perspective, is going to grow. It's going to grow in usage, going to grow in value, and the network is going to get stronger. Obviously, Bitcoin, given the Trump administration, is going to be debasing the dollar via increasing the deficit. I think Bitcoin will be your natural hedge, but both of them are going to be integral parts towards the global financial system, which does not seem to be rejecting these ideas around cryptocurrencies like they were back in 2017. And as a result, I think some part of the portfolio being exposed to it is not the worst thing in the world. And we continue to get more evidence to see that is playing out. Yeah, SoFi is ridiculously, not SoFi, but well, SoFi as well, one could argue is undervalued, but PayPal's ridiculously undervalued. Like in 5 years, they're going to buy back the entire float of the company, given the amount of buyback. They're doing like $6 billion worth of buybacks a year. It's just no one cares, which is the sad part. So like, how do they get people to care? Maybe there's a crypto angle to it. I don't know, but we're going to see how this one ends up playing out. Okay, grab. Let's talk about Grab. So Grab right here, $5.98 in the pre-markets, down about 2 cents. We got the first $6 close on Grab for the first time in 5 years. It actually closed at $6.05. So it was really strong momentum into the closing not only at 6, but above 6. Today's going to be a big test. Today's going to be a big test for Grab. I don't know if Grab is up to live up to the challenge of going day 2 and holding on to its momentum. I don't think the momentum on Friday was driven by speculation. I definitely don't think it was driven by retail. I mean, what did retail participate? Sure. But was it like a retail fueled rally where like someone tweeted about Grab and 100 million shares worth of volume woke up and was like, oh, we got to like buy the stock? No, I don't think so. Grab does not have that type of retail cult or retail following. Over the weekend, I saw 10x more posts about Grab on Twitter than I've seen like in the past couple of months. So maybe it'll get there. But it's not there yet. So I don't know. I mean, there's a partnership they announced this morning with Alipay, which is one of the biggest payment systems in China from Ant Financial, and that's going to incorporate Grab ride-hailing services when users of Alipay go to Southeast Asia. There's a bunch. They partnered with the Thailand government. They partnered with Malaysia for cryptocurrency payments. There's like a bunch of these little sub-headlines that we've covered on the channel for the past couple of weeks. None of those are enough to do a move that Grab did on Friday to the tune of 110 million shares of volume, up basically almost 20% in 2 days. And so I don't really know why it moved. But the fact is, if you just look at the chart, it feels like it has been consolidating for the past couple of years. It has officially made a new 4-year high at $6. It hit $6.60 last night in the overnight markets. Now I know that volume is very low compared to when the markets open at 9:30, but the fact that people were even willing to buy it at those levels just means there was definitely hunger for the shares. And now we got to see if it can continue. Now, in terms of insider selling, I've been saying for the past couple of months, Grab has had no insider selling. On Friday, they had an insider sell by the CEO of 1.5 million shares. So there you go. It's been a couple months. We've got your first insider sell. Kind of makes sense to me. I mean, the first time Grab, he sold at like $5.50, so he didn't get it $6. But the fact that, Grab finally broke out after 4 years, obviously as an insider, you would be at least willing, to take some profits at those levels because you haven't seen these prices in 4 years. You haven't had the liquidity in 4 years. However, the fact that the market said, cool, we're going higher, to me was incredible. So he sold at $5.50, and I think some of his shares at $5.30, and the market was like, we're going to $6. And so now this is where things get really interesting. Really freaking interesting. ASML's back at 832. Really? Holy crap, dude. ASML, almost a complete recovery. Wow. Shout out to anyone who bought the ASML dip. Almost a complete recovery from the lows 3 months ago. It fell to 564. It was at about, it was at 820. It fell to, not 564. That was back in April. It fell to 690 after earnings. Now it's back to 830. Not bad. Lithography is not that easy. It is not that easy to do. And, one could argue ASML has a complete monopoly on it. So shout out to ASML right there at 832. But now things get interesting with Grab because the question is, do the big guys step in? Do the institutions step in? Does Howard Marks step in even further? Does Howard Marks's position start getting more publicized to the media because maybe they just didn't know that one of the most legendary investors of all time has been buying this thing under $5? Does retail get excited? There's still 4 billion shares outstanding. Can that stock easily move with that many shares? There's a lot of different nuances to kind of how this plays out. And today, I would just like another $6 close. I don't want to be greedy. I just want another $6 close. If we can get there, I think the market would start to normalize grab above 6. And if we can normalize above 6, we can make our way to 7. But if we fall back to like 520, 530, it would be a pump fake. And I just don't easily see that happening. But today we're going to find out how the market thinks of it. Oracle right here, that's up 5% in the pre-markets, potentially based on this CoreWeave deal. 121 on CoreWeave. Again, the United States and the UK are going to be announcing a bunch of stuff this week in regards to technology. Already, the United States came out on Friday and said they're going to be making some massive investments in the United Kingdom. I think that's why Jensen's going there as well. So we will see a bunch of those updates. Maybe that affects CoreWeave, Oracle, Salesforce, all these big companies that are trying to play a role in regards to AI. Wow, Carisdale Capital says they're short CoreWeave. Dude, what is going on with CoreWeave this morning? You get a massive update in regards to Nvidia and CoreWeave, and now you get Carisdale come out and say they're short. I mean, goodness gracious. I don't think the market's pricing that in given this momentum in the pre-market. So there you go. We're short CoreWeave. Stock is up 30% since last week's Microsoft Nebius deal, and Oracle's all OpenAI backlog surprise. Bulls are missing the full story. CoreWeave anchor customers are signing bigger deals elsewhere because it has no moat. Growth means nothing if returns don't cover the cost of capital. For CoreWeave, they don't even come close. Every dollar borrowed to spend on GPUs and leasing data centers just deepens the hole. CoreWeave shareholders only benefit from whatever's left when the chips are no longer under the contract. NVIDIA's annual cadence means today's GPUs are obsolete not too long after they're installed. Maybe that's also why Carisdale is bearish on this NVIDIA $6.3 billion deal that was announced this morning with CoreWeave. CoreWeave is boxed in with business model that revolves around hyperscalers signing multi-year deals to backstop expensive debt that keeps it out of the mid-market. Management knows the economics of this model are weak. That's why in June it handed analysts an illustrative contrast with dazzling IRRs and rapid payback. 80% margins, zero cost of equity, and residuals on 5-year-old GPUs. A former CoreWeave engineer called it utopian. These numbers exist for one reason: to distract from the unit economics that don't work. We rebuilt the same case with realistic assumptions. The truth: equity holders see no cash flow during the contract term and only speculative crumbs afterwards. Meanwhile, the debt stack and cash burn hits is brutal. 11 to 15% delayed draw loans, 9 to 10% vendor financing, $3 billion in junk bonds. The CEO admitted debt is the engine, it's the fuel. We see $19 billion of cash burn in 2025 and $40 billion through 2028. CoreWeave is not the future of AI infrastructure. It's other people's chips and other people's data centers financed with other people's money. Lenders may get paid, but equity holders get left holding the bag. Fair value, $10. Shout out to the research analyst at Carisdale that made a compelling case for this. I don't know if it's getting to $10. That is hard to imagine in a world and AI CapEx only increasing. There's a lot of ways to answer this short report just off the top of my head, which is increased CapEx eventually leads to an increased ROI. Increased ROI keeps the party going for CoreWeave selling more GPUs. Now, their argument about margins and unit economics and like the depreciation on GPUs, I mean, that's bolstered by the 8K filing we got with Nvidia today that they would backstop any of the lack of sales. The question becomes, how aggressive is demand for the overall CapEx build out? Because they might be right that the unit economics don't make sense right now. If the demand is exponential, as Jensen keeps telling us it is, for a variety of verticals, whether it's FSD, humanoid robotics, whatever it may be, CoreWeave's going to have a bidder, always. CoreWeave's going to have a bidder. I mean, this is the same sort of argument right here with Nebius, right? Like if the data set Nebius right here up 2.3%, if these will continue to get built out, why did Microsoft give Nebius $20 billion over 5 years? Microsoft does not have the capacity to handle the amount of demand they're getting, and they have to outsource it to a smaller company to help them build out these data centers. Those data centers are filled with GPUs, and if the GPUs are tied up through NVIDIA because there's just too much demand and NVIDIA can't even fill the supply, same thing with TSM, that's where CoreWeave comes in. Now, the reason I never love the business model is because at the end of the day, they're reselling a commodity that's going to constantly depreciate and constantly have a new model. It's almost like they're an iPhone reseller and they resell the iPhone 17, but then the iPhone 18 comes out and then their 17 is just not that more valuable. But resellers can still make money. The question becomes, at what valuation should you be paying for the level of reselling that they're doing, and what is sort of the North Star of this business? I mean, maybe Carisdale Capital has a point that it's not the most aggressive vision because they're just reselling GPUs. But if Jensen's right that there's a $4 trillion bill by the end of 2030 coming for CapEx, that is not going to be fulfilled all through NVIDIA, AMD, Broadcom. You're going to need some of these third parties like a Nebius or a CoreWeave, and that's your bull case. So Yes, Nebius is diversified. Granted, the majority of the business I still think is more data centers than anything. But yeah, I will agree. I agree with this comment right here. I don't know if it's going to $10, but I also agree the debt is insane. 1000% I agree. When you look at CoreWeave's debt compared to not only their free cash flow, but their annual revenue run rate, it's aggressive. It's very aggressive. Now, granted, they're growing so fast that the market has not cared, and that's why this valuation has held up. But regardless, I think that's why Carousel might continue to be short. Did you cover the Deutsche Bank report on CoreWeave? I did not. Did they give them a decent price target? Because that also could be pumping the stock if they're not super bearish. By the way, SoFi really moving right here in the pre-markets. CoreWeave named short-term buy idea. Deutsche Bank, positive factors coming together. Demand for AI infrastructure appears almost insatiable. Yeah, so Deutsche Bank is basically saying what Carousel wants them to say, which is that, hey, this is not a real company that's like some massive ecosystem platform play, but rather the demand short-term for AI infrastructure appears almost insatiable, and demand will significantly outstrip supply in the near to medium term. Carousel is saying we understand the demand is higher than the supply. The problem is the commoditized nature of that supply, aka GPUs, will increase competition, decrease margins, and eventually be obsolete every 2 years as Nvidia introduces new supply to the market. Many players will try to fit the supply into the demand, whether it's a Nebius, a CoreWeave, Iran, etc. And that's where CoreWeave's business is not the most sustainable. One of them is going to be right. One of them is going to be right. Again, the Carousel has an argument. I don't know if that means this thing's going to $10. So, and obviously the market does not think that, because that short report is having zero effect on CoreWeave right here, up 8.23% based on that Nvidia deal that came out in the pre-markets. S&P 659. We got 3 minutes until the market opens. It's about $1 away, not even $1, 30 cents away from hitting 660, 6,600 on the S&P. Google almost at 245. SoFi 27.29. Grab right here, 590. So Grab getting sold off a little bit as soon as we get into, or as we're a couple minutes away from the market open. We'll see if that demand comes in to buy that up. Tesla right here again, 424. Elon Musk did buy $1 billion worth of stock in the pre-market, which is getting the market excited. Nvidia right here, 175. You got a China headline. That's not the most bullish for Nvidia, but we'll see if that actually affects the stock. Bitcoin right here, 115, which actually made a move. It was at 112 last week. So over the weekend, not too bad. AppLovin got upgraded to 664 this morning from JP Morgan. So that one is at 579, slightly red. Circle right here, 129. Microsoft right here at 509. Again, they got that Nebius deal last week, which was great for Nebius and Microsoft. Amazon at 230, Reddit at 255, and then you got Palantir, which got reiterated with a price target of 165 by Mizuho. They went to their offices, liked everything they saw, but they said valuation is still aggressive, so 165 is their price target. Palantir is at 169. Archer, is there news on Archer? I think there's news on eVTOLs in general, and that's why that's moving. Archer right there up 7.43%. Joby and Archer. Cantor Fitzgerald reiterates overweight, price target at 13. Okay, looks like the Cantor Fitzgerald upgrade should be the reason. Also, Archer announces plans to participate in a program with trial operations of the Midnight eVTOL in partnership with United Airlines. Okay, so the market's like, all right, finally, we're going to get to see this eVTOL actually in the air, because we have not seen that yet from Archer. For Joby, we have, which is the difference between both. And that's probably why that one is catching a bid in the pre-markets. All right, folks, we got 1 minute. Here we go. Let's see how this ends up playing out. Again, thank you, everybody, for being here. We are back to a regular market open and market close every single day. I am sorry I've been gone for the past 2 weeks. I'm going to get back into the groove of everything, and we're going to keep this going. And yeah, excited to be back. Excited to be here. Ladies and gentlemen, it is Monday, September 15th, 9:30 a.m. Once again, the stock market is now open. All right, wake your ass up. Let's get into it. Here we go. Robinhood opens up at 115.27. That is up 0.24%. Palantir right here is at 170. That's up 0.76% as well. Tesla, 420. Tesla right here at 421, not too bad. So Tesla again was at about 430. Now it's at 420.5, up about 6.12%. Nvidia 176, S&P trying to go to all-time highs. Grab gets sold off 3.2%. All right, so you got some people taking some profits right there at 6. Kind of expected. I mean, it broke out a 4-year high, so you would imagine some people take some profits right there. 579 on Grab. If we can still close above 550, that would make me happy. Getting back to 6 would also make me very happy. But let's see if the buyers step in on that Grab dip. SoFi right here, 27.34. SoFi's all-time high, I think, is 28, if I'm not wrong. 28.21. So it's about $1 away from all-time highs, which would be incredible. AMD right there, 159. S&P, new all-time high, 660 on the S&P 500. Incredible. SoFi 27.10, Palantir 168, Tesla 422. Tesla holding on to that 7% momentum. PayPal 67.80. That's up 1.3 based on that Bitcoin Ethereum partnership. Google is at 245. Wow, 240s. Dude, Google was at freaking what is it, 150 3 months ago, 246. This has got to be one of the best stories in the market. One of the best stories in the market, and that you got to imagine is helping the S&P 500 hit new all-time highs. Meta right here, 754. Amazon 231. PayPal right here, 67.71. Apple iPhone 17 announcement last week. I don't think it was the most bearish. It wasn't the most exciting, but it was one of the more exciting iPhone updates in the past 5 years, which I think the market is recognizing. Also, we'll talk about the pre-order demand in China for the iPhone 17. It's pretty aggressive, and I think some of these analysts are realizing there might be a bit of a super cycle on Apple, at least in China, with this iPhone 17 upgrade, which is why the stock is moving higher. S&P 659, Google trying to go for 247. What a day for Google. That is up almost 120 billion in market cap right now. 246, 247. There you go. 247. 247 on Google. BM&R, is that red? BM&R goes red, 3.2%. Again, BM&R Grab, massive days they had on Friday. BM&R was up like what? 15%. Grab was up 8%. You're taking a breather the morning after, which is not that crazy to me. But they are taking a little bit of a break. Nvidia right here, 175. S&P above 660, and then Tessie not slowing down. Not slowing down. ASML, this one you have to be patient with, but if you bought the dip, congratulations. 840, completely recovering everything it lost from the 50% drawdown on the earnings back 3 months ago. S&P again, 659. Where is HIMS? HIMS, 55.23. That's slightly flat, not too bad. ASTS, is that moving? That was down last week based on the SpaceX acquisition. ASTS up 7%. Kind of catching up to Rocket Lab. So this was at 37 last week. Now it's at 41. Rocket Lab 54.54. That's up another 2.3%. Rocket Lab continuing to maintain its momentum. Neutron likely coming. I mean, there's an argument by the end of this year, but more likely than not early 2026. Definitely not in 2027, which will be good for the broader market as they've been waiting for Neutron to officially launch. Oklo up 7%, 87. Not too bad. Where is Open Door? 992. Open Door trying to get back to 10. That's up 10%. I mean, when did Elon invest his $1 billion? September 12th. September 12th, $389 was the average. At least that's what I saw in the filing. Grab right there at 570. September 12th and 389 was it. So basically on Friday. I mean, he might have bought some shares like a couple days before as well, but based on the filing I saw, it was September 12th. And the average prices were 370 to 396. Overall average was $389. 247.60 on Googs. 247.60. Goodness gracious, bro. Google saying we are not slowing down. It's 20 cents away from 248. 20 cents away from 248. Farzad, thank you for the $100 super chat. Congrats, Tesla Bulls. Amit is the GOAT. I appreciate it, Farzad. Congratulations to you. He has been covering this name publicly for the better part of 5 years now. And Google, as I say that, just bust through 248.13 like it's no big deal. My goodness, what a move on Google. Tesla right here, 423, not giving up 7%. So not all-time highs, but pre-market highs were 430. Now it's at 425. So really not giving back that much of the gains. And a lot of people that have followed Farzad and his journey likely have bought Tesla. And you're getting some nice momentum right here. Pretty incredible, dude. Pretty incredible. I did not expect to wake up and see a move on Tesla to the tune of 7% based on Elon buying. I could have thought of a lot of other headlines that would get Tesla to get that momentum. Not Elon buying $1 billion worth of it. SoFi right there, 27.30. And that was the headline. which was very, very exciting to see. Yes, 2028 options are live today as well in January. So today's actually a big day because a lot of these options are opening up, and that could just lead to a lot more call buying for those leaps going into 2028. Grab getting sold off pretty aggressive right here, 6.3. So again, this was kind of my fear with Grab. First close above 6. Does it really have the momentum to stay above it, at least in the pre-markets, or not the pre-markets, at least in 5 minutes since the market open, we're seeing does not have the juice to stay above 6 yet. Now, if it can get back there by the end of the day, that would be bullish because that means you have plenty of dip buyers step in. But we got to see with Grab. CRM right there, 242. Meta, 758. Google, 248.15. I will check 249 resistance, but that is not slowing down. SoFi, let me also check 28 resistance on SoFi. And see what we've got going there. Meta, 757. Right now. Open door, yes, that's up about 12%. All right, so SoFi 28 resistance, 65,000 shares. 65,000, which is just not that crazy at all. And Tesla right there chilling at 421. Meta right here, 757. SoFi 2726. Tesla 423. And then Hoodie. Now, Hoodie, again, after S&P inclusion, after Hood Summit, Hood pumped a nice 20%. It's taken a breather as well. So a lot of these names that have piled on with momentum over the past couple of weeks, not really getting as many buyers to step in, which I understand. I think for Hood, it's going to take another Q3 earnings to really show that the growth is sustainable. But 115.26 on Hood after the announcement of Robinhood Ventures, which is the big announcement they put out today. SMCI 44.70, AppLovin at 584. AppLovin getting some love. That's up a little bit. TLT, that's up a bit on the day. The 10-year, we got a bunch of macro stuff to discuss. Wow, 10-year. I think it's the lowest it's been in 5 months. 4.039. 4.039. And that is very bullish as yields are beginning to come down, even in the face of Jay Powell getting ready to cut, which obviously should be the catalyst for yields coming down. U.S. and Britain to sign flurry of major nuclear power deals during Trump's state visit. Okay, so that's why Oklahom's pumping. There you go. The U.S. and the U.K. looks like nuclear deals will be signed, and that is pumping Oklo, likely pumping SMR. Let's see if that one's up right here. NuScale Power, that's up about 1.2%. NNE, Nano Nuclear, that's up 2.6%. Oklo, again, Oklo, no revenue, no earnings, but I mean, the stock was at $6 in November. It's at 85. So obviously the market believes that nuclear demand is going to be gigantic. And as a result, it is not slowing down. Google 249. Google hit 250. My goodness. Google hit 250. Guys, I would want to ring the bell, but I really can't because at the end of the day, this is a floor with a lot of people on it. So when I rang the original bell, I could already tell people were looking at me. So I cannot ring the bell for Google at 250. I will do it on the market close because otherwise someone's going to call management and tell them to get me the hell out of here. But 250, baby. 250. This was at 150. 8 months ago? Not 8 months ago. What am I saying? I mean, it was 8 months ago, but 3 months ago, it was at 150. 250 on Google. Congratulations for everyone that's in this heavy. If we look at the 1-year chart, literally in July, 150. It peaked at 170, then it dropped all the way down to 145, then it started normalizing around 180. Even if you got in at 200, forget 180, 150, 170. And now it looks like it wants to get to 251. What is causing Google to have a 4% day? That is not natural. I feel like there's got to be some headline there, potentially in conjunction with Nvidia. Oh, I think I know why. Did anyone see the big news over the weekend? The really big news over the weekend? Yeah, there you go. Jack got it. Gemini is now number 1. Gemini on the App Store is now number freaking 1. For the longest, OpenAI, ChatGPT, was number 1. Over the weekend, Gemini took over. It is now number. I don't think this is the only reason, but this is definitely a hell of a reason. It is hard to deny the work that Google has been putting in on their growth team to get this application to get momentum. And now it is. It's a big deal, bro. It's a big deal because, first of all, ChatGPT, I'm pretty bullish on it having first mover advantage in AI. And like, obviously, like AI, whenever one thinks of AI, they think of ChatGPT. But there can be something called first mover disadvantage, which is Google Gemini has way more data, way more ecosystem. They learn from all the mistakes ChatGPT made, and then they just use their distribution to launch an even better LLM. And if people start thinking of Gemini as like the core association with AI over ChatGPT, which I think right now it's far and above ChatGPT equals AI to like any random person you see on the street. If that flips to Gemini, I mean, at the end of the day, ChatGPT is just a model. And that model is losing a crap ton of money. So, I mean, there is a world where investors say, well, Google has the ecosystem, Google has the distribution, Google has the ability to partner with Apple, and maybe Tim Cook doesn't really want to trust Sam Altman, so he uses Gemini as the backend for a realistically meaningful Siri update. I mean, there's a lot of arguments to just say Google is going to be the head player in AI, enough to overlook the potential decline in search, which isn't even declining as per Q2 earnings. It was at 12.7%. SoFi, by the way, trying to break 2750. So not too bad. Oh, wow. Grabby Grab coming back to life. Okay, cool. Amid stop yap and look at Grab. All right, look, it's coming back to life. It's nice. We got to see. Can we break above 6? If we do, that would be very, very bullish. But dude, I mean, like just unbelievable momentum on Gemini. And it looks like the market is starting to get excited about this. Dude, if we actually get back above 6, that would if we get back above 6, that would be bullish. Like for it to climb down 7% and then have a recovery, like a real recovery. I mean, that you know what that does to a lot of traders? That makes them think, okay, 570, 580 is my buy zone. If I get that opportunity, I should buy. If it's gonna be in that range. And you definitely need those traders to think that you need them to be comfortable that it's not a fake out, that they're like, there's just a general up and down swing and it shouldn't be like a one-off occasion for it to get to those levels. Even Hoodie coming back, 116.31. Even Hoodie coming back, 116.31. Did you see Trump's post on quarterly reporting? Yes, I saw it. It was very weird. Trump came out this morning and said, why should companies have to report every 90 days? I did not understand it. I really didn't get why he said that. It just kind of came out of nowhere, bro. It's like this morning, he's like, yeah, companies shouldn't have to report every 90 days. I'm like, dude, I kind of want my companies to report every 90 days. I would want to see that. But yeah, I don't know exactly why that was the case. UNH, is UNH dumping today? UNH right here, that's down 1.3. That was up 15% last week. So that's taking a breather. That's not that crazy. Google right here, 248. SoFi, 2750. Dude, SoFi getting momentum. Grab getting momentum. Google getting momentum. All three of these were kind of just like laggards in regard to some of the other high flyers. And they're all stepping up. They are all stepping up. All three of them, in my opinion, incredible companies. Amazon right here, 230. And then Reddit at 258 on the day. He doesn't want them talking about how the consumer is weakening. It was so weird, bro. You have to think there's some ulterior motive. Because like, why would Trump understands the public markets. He understands the stock market. Like what investor would be okay with less information, less transparency? He says, subject to SEC approval, companies and corporations should no longer be forced to report on a quarterly basis, but rather report on a 6-month basis. This will save money and allow managers to focus on properly running their companies. And then he's like, China has a 50 to 100-year view on management of a company, whereas we run our companies on a quarterly basis. It's like, well, wait a second. China's economy is nowhere near the American economy in terms of public equities that you can actually invest in and the return you can actually get by, taking a chance with your hard-earned capital and allocating to a single stock. And one of the reasons people feel comfortable allocating to a single stock is because every 90 days you get an update on what's happening with that stock. It came out of so left field. I saw the tweet this morning. I was like, what? You're saying we should have less transparency in one of the world's best capital markets? Like, it was weird. It made no sense to me. But I don't know. Maybe there's some news coming out in terms of how he's trying to navigate this. Europe is 2 times a year. The amount of cost is high to do it quarterly. Guys, I don't buy that argument. It costs a company a lot of money to show their numbers quarterly. I mean, if you're a public company, you should be able to afford whatever it costs to do an earnings call or to release your numbers. Like, And also, every example that I'm hearing, Europe and China, they do it, every 6 months, every year. They don't have thriving capital markets like the United States, right? So maybe there's a reason. And part of the reason is investors want clarity. And in the United States, there's a big investing community that craves to get more information. And I can understand how it's annoying for the company, but it also forces the company every 90 days to perform, which is like, dude, if you're going to part with your capital in a company, you want to know every 90 days they're working their ass off to give you a return. Corey right here up 7.5%. So that one's not going down based on Carousel being short. Verizon 44, that's flat. Tesla fading off a little bit, still up 5% on the day, 417, which is not too bad. And Grab trying to get back to 597. I am quite impressed. Usually Grab drops that low and then the volume dies out and it just stays stuck there. The fact that people stepped in at, what did it get? 560 was the low today. Not too bad. Not too bad at all. Jose says CoreWeave plus Nvidia and Nvidia plus China. What is going on? Jose, if you are free in like 20 minutes, let's get you onto the show. I would love to get your thoughts. Oh, Jose just messaged me. He said, I'm good if you need me. Yes, Jose, I need you. So yeah, Jose, hop on in like 15 minutes and we'll get your thoughts on this CoreWeave deal and see what he thinks about it. Iran. So again, I did buy 100 shares of Iran as kind of just like a whatever at 28.90 after the Nebius deal. I didn't expect it to move like this. Otherwise, I would have bought a lot more because, if I knew at 28 it was going to 36, I would have bought more shares. But I didn't know that. 35.94, that's up 5.7%. That one's catching a bid based on this CoreWeave deal. Nebius also catching a bid up 3.9%. Looks like from this CoreWeave deal. Bitfarms, I think that was moving today as well. Bitfarms up 14%. This was a Bitcoin miner. I don't know if they have turned into a treasury or something like that. But if they did, then that could be potentially the reason. They might also just turn into a data center. I'll see if I can get the reason right here. But Bitfarm, yeah, dude, it looks like Bitfarm's trying to turn into. Do you guys know this one? I traded this one like a year ago. It looks like they might be trying to become a data center play. I'm seeing it getting compared to Iran and Cypher. A lot of these Bitcoin miners are just transitioning. Yeah, data center pivot. There you go, dude. This is the new strategy. If you're a Bitcoin miner, you can't make money off Bitcoin mining. It was never the best business model. But data centers are hot right now. And I can understand when people think, oh, data centers are a bubble when they see all these random companies just turn into data center plays that have nothing to do with data centers. But it kind of makes sense. If you have all the facilities to mine Bitcoin, you probably can use those facilities for a use case that, quite frankly, is just way more important than mining Bitcoin and has a way better business model because the money that you get is guaranteed from a hyperscaler like Nebius getting $20 billion from Microsoft. So it's guaranteed revenue, guaranteed demand, and an actual use case for your facilities that's not as volatile in the output being a data center that, or the output being Bitcoin that, if the price doesn't go up, then the Bitcoin is not that valuable. Wow, Grab back to 6. Back to 6. Not too bad. Not too bad. I'm thoroughly impressed. I will say that. Thoroughly impressed that it actually recovered back to 6. That doesn't happen often, guys, on Grab. Usually we go through the pump one day, the dump the next day, and then it's just stuck. People stepping in is quite incredible. It really is incredible. That means people saw that dip as an opportunity and they said, no, we're stepping in, we're buying. What's the volume on Grab today? Bitmine, by the way, down a little bit. Grab, wow, 20 million shares. Average volume's 37 million. They did 20 million in 20 minutes. That's 1 million shares a minute. Someone knows something, bro. Someone knows something. Someone absolutely knows something. This type of volume, you don't see that often. You don't see that often. SoFi 2730, Google 247, Hoodie 115, Palantir 170, Archer up 4%, $9. Duolingo 297. Let's take a look at the heat map today. How's the market performing? Pretty much everything is relatively green, except Eli Lilly, Netflix, energy plays, tech is green, Microsoft's red, Nvidia's red, Apple, Amazon, Tesla, Google, all the software companies are green, financials are green, insurance is green, healthcare is down a bit, which explains UNH. And we don't see that much more red across the board. Yes, Grab was 660 pre-markets. That is correct. Overnight, it was 660. And so looks like that demand is there. Wow, Google over 3 trillion. Is that for sure? Google, yeah, 3 trillion exactly. Google 3 trillion exactly. Oh my. Oh my. Google hits a $3 trillion market cap, folks. By the way, the top companies, the top 7 companies now are all United States companies. Saudi Aramco used to be there, but now with Broadcom at 1.69 trillion, there you go. The top 7 companies in the world are all United States companies. Market cap of 3 trillion for the first time. Okay, let's open up the stock draft. Let's see how we're doing there. Get some updates on it. Matt is up 27%. I am up 23%. Losers, Duolingo down 37, Visa down 3, up 19 on Apple, up 27 on Grab, up 85 on Nebius, up 16 on JPM, 26 on AMD, 26 on Tesla, 50% on Hood, and 20% on Palantir. Steve is up 5%. Tanner's up 15. Chris is up 8. So you got Matt at 27, me at 23, Tanner at 15, Chris at 8, and then Steve at 5. That is what we have on the stock draft. So I'm about 4% away from Matt. If Duolingo could go up 4%, that would help. But those are the updates that we got. Dude, not bad. This is not okay. So let's get into this conversation today about September. The elephant in the room is, wait a second, isn't September supposed to suck? Isn't September supposed to be bad? So far, take a look at this chart. This is the S&P 500 September monthly performance over the first 2 weeks. Historically, as you can see, the first 2 weeks in the blue line go down. The red line, which is 2025, is going up. So we've kind of got the odds against the historical tendencies of the S&P on our side. However, the bearish news is that the last 2 weeks of September, the second half of September, as you can see on this chart right here, the median 2-week S&P 500 returns since 1950 are negative. So starting from today until the end of September, theoretically, we should expect a negative return on the S&P 500, which means individual stocks could be negative as well. This is from Goldman Sachs. But the first 2 weeks have been pretty good. So I saw these charts this morning and it was so funny because it's like, we said September sucks and everyone's like, okay, we got to be ready for September sucks. First 2 weeks, September's incredible. It's like, well, actually, you put your glasses up. Well, actually, the last 2 weeks of September are the one that sucks. And now we're just waiting. Now we're like, okay, let's see if like the last 2 weeks are actually the reason. But if we defy the last 2 weeks historical tendencies for the S&P 500 to go down. Again, we have FOMC on Wednesday, which if we get that rate cut, maybe that officially confirms. I think the market's obviously priced for the rate cut, but maybe that allows the market to be stable versus it being a sell the news event. Maybe we don't have a crappy last 2 weeks, which would be quite exciting for the broader markets. Tesla right back here to 420. Nvidia 176. Nvidia barely down. It was down 5%. Now it's down 1%. So it looks like the market's ignoring some of the pain on Nvidia based on that China announcement. Sachin says Grab has 83% of institutional ownership with lots of cash. To be honest, I will be more keen on Grab acquisition by a company or PE group instead of it acquiring any other company with this kind of move. Yeah, I mean, look, they also have $8 billion in cash, right? So still the company market cap at $24 billion, your enterprise value is at $16 billion. Grab back to $6 billion. So at the end of the day, you're still, to me, it's still not that expensive because when you have $8 billion in cash, it's like, all right. So they're doing almost $3.5 billion in revenue, $16 billion enterprise value, growing at almost 30%. Like, I think it deserves to be closer to 10. That's what tells me this would be closer to fair value. And the question simply becomes, are the institutions that have been loading up with 83% of the, I mean, this is not a retail story. 83% of the float is owned by the toots. So maybe retail comes in as the price appreciates and gets more exciting to people. But the institutions have been loading up for the past 4 years now. And realistically, over the past 4 months, I mean, they've been loading more aggressively. Salesforce right here, 243, Meta 759. Salesforce founder and CEO Benioff was once again complaining about Palantir. I don't understand why this guy keeps talking about Palantir because he just looks kind of desperate every time he talks about it. And it's a bit weird. But once again, on Friday, it's like his third time in 2 weeks, he complained about Palantir.
Seems to be, an idea out there, and you see it in the valuation of the company Palantir. This idea that that's the future of software. It's disrupting software, and it's doing so without a marketing team.
Oh
Your
my
thoughts?
gosh, I am so inspired by that company. I mean, not just because they have 100 times, multiple on their revenue, which I would love to have that too. Maybe it'll have 1,000 times on their revenue soon, but the prices that they charge to their customers, I mean, it's got to be the most expensive enterprise software I've ever seen. I've been looking at their demos this week saying, my gosh, how do they get these prices? Because I thought I had analytics, I thought I had data management. Maybe I'm not charging enough.
And you're competing with them.
We compete with them. In fact, we just won a huge deal at the U.S. Army against them.
Seems to be, an idea out there. And
So Karp did have a response to this, by the way. This was Karp's response when he was asked about what Mr. Benioff is saying. Is Grab going green? Are we going green? Wow, we're going green. 605, baby. So that is bullish, bro. That is unbelievably bullish. Incredibly bullish for them to go down 7% and recover within about 10 minutes. That is not too bad for Grab. This is what Karp had to say towards Mark Benioff.
There was the CEO, founder CEO of a CRM company that was making some comments yesterday. Did you catch?
I look, Palantir, we structurally mind our own business, and I love that everyone minds our business. But I would say that we constantly have people on TV. It always sounds like, the guy in high school who's like, but I'm so nice. Why don't I get laid? It's like, it's literally like, it's the same thing. I'm so nice. I create all the value and I'm so nice. I'm begging to get laid and no one, it's like, I have such a big this, I have such a big that. And we're like, yeah, we're not trying, dude. We're here, and yeah.
I don't think about you at all.
And it's like we are very focused on value creation, and we ask to be modestly compensated for that value. And if you disagree, you don't like us as a client, or you love us as a client, but you think it's like great, we're doing our thing.
Speaking of, I mean, dude, it's kind of right. It's like he's complaining that Palantir charges high prices and they get all these government contracts over Salesforce. It's like, well, the government's willing to pay those high prices over Salesforce. Maybe there's a reason. And that reason is because Palantir software is deeply focused on value creation. Grab at 608. This might be the breakout phase we've been waiting for, folks. And a close above 6 today would definitely be positive for that breakout. Obviously, any momentum above the 650 range would really be positive to see if we can get there. But just holding 6 and normalizing that this is a $6 stock, not a $4.50 stock, not a $5.50 stock, not a $5.20, not a $4.70, all these numbers that I've seen on this stock for the past year. This is a $6 stock at minimum. That would be very bullish. So not too bad. BM&R, are we moving? BM&R is moving. 54.29, up 1.54%. Okay, so update on my BM&R position. Obviously, you guys know I have averaged down pretty aggressively. I'm in heavy, folks. So the initial position, I think was about 1,500 shares. We're at about 6,000. So we're at 6,000 shares on BM&R, and I had covered calls at 46. I rolled all of them to November for 60. So my entire position is up for sale at $60 for November 21st. If it gets to 60 before then, I will roll it probably to 80 for January 2026. I've already collected about $35,000 of premium on this name. So my adjusted cost basis is realistically closer to 43. But my actual average is like $46.30. So it has become a legit position for me. It's become heavy. And that initial position of 1,500 shares I bought at 49, definitely a little early. But I've just been buying heavy at 40, 41, 42. I think the lowest I got was like $40.50. And now my average cost is $46.39. So here's the thing. I kind of don't care if my shares get called away. In fact, if you put a gun to my head and said, Amit, if you're raising cash for 2026, you want to hedge a little bit, what's the first thing you would sell? It would be BM&R. I'm sorry. I love it. I love Tom Lee. I get it. But it's also super volatile, right? So to me, I don't think of it as like the most amazing long-term investment. I think of it as leverage against Ethereum. I want to keep a certain position. I don't know if I want to keep 6,000 shares forever, but I do want to keep minimum 2,000 shares for the long term. But I definitely would be willing to part with couple thousand shares by the end of the year at like that 60, 70, $80 range. Like that's just not the biggest deal to me. So the volatility is incredible. I'm very happy with the performance of the name. It's one of those things where you buy low and then it makes a big run and then it becomes a full position for you and you kind of just sit back and let it play out. And the cover calls premiums that I've collected have just been incredible. It's almost like 10, 15% in a couple of weeks, which is just crazy. So that's kind of my update on BM&R. I will let you guys know if I ever get those shares get called away, but they're all up for sale 60 November. If we get to 60 before that, I'll roll it to probably 80 January. And then if some of those shares get sold at 80, I am okay with that, especially when it comes to raising cash for 2026. But that's what I have on BM&R. App11 right here, 588.82. That's up 1.17%. Pinterest right here, 36.14. Tesla still holding on to 5%, not giving up that 5%. AMD 158, and then Grab holding above 6. Again, a $6 close to me would be very strong. And so we got to see if that can play out. S&P 500 right there, 660.4, trying to go for 661, and then Palantir, 169.50 on the day. IONQ's up 5.5. Okay, so all of Quantum seeming to catch a bid. IONQ's up 5.5. Rigetti, that's up 1%. And then D-Wave, 1785. So you got IONQ that's getting most of the momentum right here. Would you roll as soon as it gets to 60 or wait closer to expiration? I would wait until it gets closer to like 65-ish break even. And we'll see. Like if it happens tomorrow and if ETH goes to like 5,200 tomorrow, I would probably roll immediately, right? Because that momentum is just undeniable. But if ETH is kind of chilling at 47, 4,800 and BM&R pumps to 60, I would kind of just wait because you really need a breakout on ETH, I think, to get the breakout on BM&R. BM&R has to buy a lot more Ethereum so that their MNAV can reflect the historical multiple they trade at. Which would cause some more dilution, right? Which would get the stock to probably not explode up to like 60, 65 bucks. So like it's one of those things where you have to really see how many shares are they diluting by and at what price is ETH going up relative to the ETH per share. And you kind of have to understand that to give yourself somewhat of a reasonable argument on, hey, is this thing really going to explode or is it going to chill out if Ethereum chills out? Because I can't see BM&R going 30, 40% higher if Ethereum doesn't at least reciprocate that move to an extent as well. Because again, BM&R already trades at a multiple to its ETH, so it can't go up if Ethereum is not moving. It can stay stable if Ethereum is not moving, but it can't really go up. So to me, it's more so a question of just judging how Ethereum moves. Google right here, trying to get right back to 250, not slowing down. 249.75, 250.75 was the highs. Let me check 251 resistance now that it broke 250. We'll see if it can make a move. 251 for the Googs. 3,000 shares, folks. 3,000 shares. If the volume comes in, Google's going to break above 251. BM&R has previously been at a 2x MNAV just a month ago. Yeah, I'm not saying it can't get back to 2x MNAV. I do think a month ago it was like, it's kind of just less known, right? People were just like buying it for the hell of buying it. Now it's a little bit more sophisticated in terms of understanding their ETH per share and how much they're. So I don't know. I mean, it could get back up there. They would have to potentially take some more moonshot stakes, or I mean, essentially they're not staking yet, right? Maybe the staking itself could get them back up to a higher multiple because the staking in and of itself adds about 0.6% to the MNAV, as Tom Lee explained before. A sound down right here, up 6.3%, 1508 on the day. That's green. So yeah, I mean, if it gets to a 2x MNAV, that would be incredible, but I think you would definitely need ETH to make a little bit more of a move to see it getting there. All right, folks, let's get someone onto the show to explain what the heck is going on in the world of semiconductors, because we got a bunch of pieces of news today. Jose, good morning.
Good morning, man. How's it going?
How's it going, brother? This is a pretty wild morning with what we're seeing going on. So to recap for everyone, Nvidia tells CoreWeave, if you can't sell 6.3 billion of GPUs in 7 years, we'll buy it from you. Market likes it. And then Carousel comes out with a short report and says CoreWeave has too much competition. They're not going to be able to survive. Fair value is $10. Jose, how are you leaning, bullish or bearish on CoreWeave this morning?
Extremely bullish on CoreWeave. I mean, I think the past few weeks this is one of my stocks that I've been adding to dramatically. CoreWeave under 100. So I'm bullish on CoreWeave. I want to say that short report doesn't understand probably a lot of the AI space. I mean, CoreWeave is really great at, anybody can build can buy GPUs in theory, right? But then the ability to stand them up at a fast pace, at massive levels, and then having the type of reliability rate for them is also pretty crucial. And CoreWeave is definitely one of the top players out there for these massive scales. And that's why we see companies like OpenAI, even Google has kind of partnerships here with CoreWeave. Now, so in terms of short report, nothing to worry about. It seems like they're not too familiar with the overall market. Also, in the overall market right now in the AI data centers, power constraint is or power capacity is a major issue. And luckily, CoreWeave already has a lot of contracts with a lot of power companies or power shelves to kind of see this benefit here. So overall, not worry about the short report. I know you pulled up Uber. Anything you want to jump into here?
No,
anything
just
crazy? No.
just
Okay.
all-time
Yeah.
highs on Uber, so.
Yeah. And then for CoreWeave, in forms of the Nvidia contract, I mean, it kind of makes sense. I can see the bearish thesis. Some people might be like, oh, why is this contract coming out? Does this mean that it's the top of the AI bubble? Is now Nvidia kind of providing some form of platform? I see it more just like a small insurance. CoreWeave buys a lot of Nvidia. So Nvidia is saying, look, you should continue to be aggressive buying our solutions. Worst case scenario, something happens in the market, I'll take up $6.3 billion of unused capacity. And in theory, I'm pretty sure Nvidia is going to do two things with it if it ever comes to fruition. Is if they need to, they can use it for internal stuff. A lot of their engineers are always using AI capacity for building software solutions, for testing software products, for designing of anything, or they just find new customers for it. So this is like, let's say I have a market. Let's say I have a car and I know this car won't break down for 100,000 miles. I'm going to be like, look, you can buy all these cars, and if any of them break down at 100,000 miles or something or whatever, I'll buy them back. I think Nvidia is very confident that they're not going to have to pay for this, but it does give CoreWeave at least some, I feel safe. I can continue to build this AI infrastructure. And for CoreWeave investors, we also feel safe because if there's any unused capacity, CoreWeave will be able to sell it out to NVIDIA.
Okay, so like pushing back, by the way, guys, Google 251, absolutely incredible Google is. We'll talk more about Google in a second. Pushing back a little bit. The obvious perception right here would be CoreWeave is not confident they can fulfill the demand. And so they need insurance by NVIDIA. And NVIDIA, in order to get them to keep buying their GPUs to resell them, is willing to give them the insurance. So should investors take it as bullish that NVIDIA is like, okay, whatever. We know you guys will be fine, but if you need a little bit of a put option, we'll give you a put option. Or should they be slightly concerned that CoreWeave is thinking they're not going to be able to sell this $6 billion worth of GPUs?
I think it's great to question it, right? I kind of even talked about it. I think it's good to question it. I could see that bearish thesis behind. I think this is just an insurance. I mean, you could be the greatest driver in theory, and you still get car insurance, right? So it doesn't mean you're gonna you think you're gonna get in a car accident every day for the next year or so. So I think it's just an insurance. I think as an investor, you're gonna need to do your due diligence every quarter or so. Hopefully, analysts ask questions. Hey, is NVIDIA buying back any of this capacity right now? If the answer is yes, it's saying that, look, you're not actually meeting the demand. So I think now you created a baseline. And I guess analysts, I would say, I would be hopeful analysts during every earnings session kind of talk a little bit about this. Is that insurance? Are you guys using that insurance right now? If the answer is no, that kind of indicates that the demand is still pretty healthy. And from everything that we're hearing, right, the demand is crazy. We're still just in the chatbot era. We don't have AI agentics. We don't have robotics. So I think it's an insurance. I think an insurance in an emerging market is not the worst case. I think it was more bearish if you actually start to see it being used. I don't think it's being used right now. And the great thing is, I'm not sure if you're familiar, NVIDIA has this product called Lepton, which is kind of like the Uber of AI solutions. So if NVIDIA kind of gets more AI capacity, they just put it in this Lepton app in theory. And if anybody needs AI GPUs, they can kind of just rent it out from that Uber-based platform. Right. So I think there's plenty of demand. And I think this just helps CoreWeave investors feel a little safe, and CoreWeave as well.
Fair point. What do you think? By the way, Uber all-time high, not too bad. Google as well, all-time high. So both of those stocks really getting some momentum. What do you think, Google 252? What do you think about the Nvidia China update this morning? Do you think it's just China negotiating to make sure they get a good deal with Nvidia?
Yeah, I think it's more of a negotiation. I mean, we know that China and US are doing something this week, I believe, in Spain, Madrid, I think it's, if I recall correctly, there's some form of meetings. China needs Nvidia of AI chips, the forms of everything. They're just trying to find ways. And for those that are not familiar, the antitrust investigation is happening between an acquisition that happened in 2020 when Nvidia acquired Mellanox for about $6 billion.
Is Mellanox, is that a Chinese company?
No, it was Israeli from Israel company. It was networking. There was some stipulations from the China regulators in 2020. They said if Nvidia buys this, they gave them the approval, but these networking solutions had to be not only implemented with Nvidia products, they had to be kind of like cross-platform. Easily, the best way to kind of explain it, that it wasn't going to create purely a monopoly of Mellanox and Nvidia. There had to be ways that you can use Mellanox products in other type of networking solutions, AI chips. And I think Nvidia has actually done that really well. So I do believe this is more of just China trying to put some pressure in Nvidia to try to put some pressure in the US trades. But at the end of the day, China really does need Nvidia if they need to continue to develop in the AI space.
All right. There you go. Makes sense, folks. That is Jose's YouTube in the chat and his Twitter. You can follow him there. Jose, last question for you. Google, Gemini taking over ChatGPT on the App Store. I mean, bullish. How are you thinking about Google in the overall AI race?
I mean, Google's great. I mean, I think we covered it during earnings, and I know many people even during earnings weren't that excited. I think we were even getting comments of like, I was pretty happy during earnings, and people were like, Jose, what were you happy? It is earnings weren't that crazy. It was nothing to be bullish about, and I thought it actually pushed off all the bearish cases. And then you obviously had the regulation. The recent law stuff happening with the antitrust there, that wasn't much for Google. Google's killing it with Gemini. I mean, Gemini Banana, which is their AI editing thing, is going bananas per se.
It's very appealing.
Yeah, but yeah, so it's definitely putting a split in the market between ChatGPT and
Yo, we need to do this every day together, but this is my type of morning. This is my type of Monday morning.
No, and then you're seeing great traction. I mean, there's been reports about their TPUs. They're doing really good with their Google Cloud. I mean, I'm still very bullish for Google. I still believe it's still one of the cheapest Mac 7. Obviously crazy run up, so volatility is there, but AI for them is doing great. Is doing really, really great.
All right, I love it. Jose, thanks so much. There's his Twitter and YouTube in the chat. What the Chip Happened, that is his newsletter as well. There you guys can check out. And we will see him next time. Jose, I think, accidentally exited. I did not exit him out, so he left a little early right at the end, but oh, there he is. He's back there.
Sorry, I hit the wrong button.
No worries. I was just saying that's Jose's Twitter and YouTube, and we'll talk to you later this week, Jose. Thank you.
Thank you. Appreciate it, man. Have a good day.
Thank you. Later. Dude, what a day so far. The Googs, 4 points. Does anyone have a headline on Google? Because the only headline I have is Gemini beating ChatGPT, which I would say is definitely a reason for it to pump. I don't know if that's a 5% reason to pump, but you can imagine people are getting excited because the AI team is not messing around. To me, I think Google could have got to the top of the App Store whenever they wanted, but they wanted to make the product so good and then tell their growth team to be like, hey, it's ready. You can turn on the engine of growth. And I think over the weekend, basically you had a bunch of. The reason it's happening is because we feel so confident in Gemini, but we also feel confident in our growth team distributing Gemini, which, I mean, you would imagine Google's distribution is just way bigger than ChatGPT's distribution. And now it's working. And I think the market's getting very excited about that. Google right here, 252. That's up 4.5%. SoFi right here, 27.47, 27. I mean, SoFi not losing 27 either, up 3.3% on the day. Pretty freaking incredible. Salesforce still flat. Meta 258 or 758. Amazon 231. Grab just below 6. I would like to get back above 6, but We hit 610 on the high. Volume on Grab is 30 million in about 45 minutes, which is quite incredible. And that one's starting to recover. And then Palantir right here, 169.43 on the day. I think it's from the cloud news last week. Yeah, so the $58 billion cloud kind of pseudo guidance we got for Google based on the Oracle announcement. I mean, that could definitely be a reason. And the market just realizing, hey, we cannot deny the level of not only CapEx, but the level of ROI that these hyperscalers are getting off cloud. Oracle, now again, if you bought at 350, you're a little upset, but it's up from 230 to 300. So Oracle probably taking a bit of a breather from the high 340s. But that RPO backlog that we saw from Oracle is wild. Now, I know a lot of memes have been going around that says OpenAI signs $300 billion deal with Oracle, and then Oracle uses the money to get OpenAI or invest in OpenAI to get OpenAI to get the revenue to then buy $300 billion worth of Oracle. I mean, there's a lot of sort of like how circular is this type of stuff. And we have to see, but it does feel a bit more real than not, given the capacity of OpenAI's growth and how much cloud computing they need, which I don't think is that crazy to imagine. Google now 32% year to date. RZLV, that's another company that is also up 18% on the day. I believe these guys, Resolve AI, have a partnership with Nvidia, if I'm not wrong. And did the Google investment come today, or did it come last week? I don't think it was exactly today, but they have a bunch of different partners. This is another AI company. I've not looked that deeply into this one. Trades at about 13x ARR, and it looks like partnerships in the AI space with Nvidia, Microsoft, and Google is what's giving this one momentum. That's up 18% of the day. So you're seeing a lot of these smaller AI players latch onto the hyperscalers, grab back above 6, and the ability to generate and secure the juicy hyperscaler revenue that's not going away seems to be one of the greatest bull cases for these smaller companies. Yeah, Resolve is Microsoft and Google, correct. Rocket Lab 55.15. Is that above 55? Rocket Lab 53.59. All right, so it did hit 55. Now at 53. ASTS caught up a little bit. That's back at 40. Again, that news last week. I don't even know if that news was that big of a deal, the SpaceX acquisition, but it was enough to get ASTS down from 45. And now it's still above 39, but not in the mid 40s yet. Enphase right here, that's down a little bit on the day. Nvidia basically taking it like a champ with that China news. Even Jose's argument about negotiating, I think, to me makes sense. And then Tesla, story of the day, 422, continuing to go green. For those that are just joining, Elon Musk bought $1 billion worth of stock this morning. Or not this morning, on September 12th. That's what's leading to some of this momentum. Let's get an update on this TikTok stuff with China as they are in Madrid continuing to have conversations.
The president making those comments earlier this morning on Truth Social, where he also mentioned he'll be speaking with President Xi on Friday of this week. He said their relationship remains a very strong one. It does appear that we'll have to wait for that call to get more details on the TikTok deal. Secretary Bessent told reporters in Spain this morning that the framework is for the company to switch to U.S.-controlled ownership, but that Presidents Trump and Xi will have to confirm the details.
We believe we have an agreement. It's just subject to the leader's approval. So if you need to extend it by some period of time just to get it signed, et cetera, that's one thing. But we're not going to be in the business of having repetitive extensions. We have a deal. If there's some extension needed just to get it signed, et cetera, that's one thing. But there's just no ongoing extensions.
It would not have been extended without a framework.
The biggest question now, guys, in my mind is whether the leaders might meet in person later this year and whether they would do it either on the sidelines of the APEC summit in South Korea or whether Trump would go to China. So getting a TikTok deal was seen as one major precursor to even letting that meeting go forward. But it's not the only friction that's outstanding. They're sort of piling up now. There's those new accusations against Nvidia this morning, with China saying it violated anti-monopoly laws. There's 2 new Chinese probes into U.S. semiconductors over the weekend. And then the U.S. on the other side had added 24 Chinese companies to a blacklist last week and has been actively urging allies to put tariffs on China over Russian oil purchases. So a lot for them to work through before any sort of meeting gets locked in. Guys.
Megan, as I sort of discussed earlier, I've been following the TikTok saga for more than 5 years now. It was over 5 years ago, August of 20, when we first had the potential ban under the then Trump administration. I believe that's right. And who the buying group may be. But, do we know? We don't know yet what the Chinese have to say about whether they've reached a framework, correct?
That's right. We'll hear from them at 11 a.m. Eastern. So just a little under an hour from now, we're going to hear from the Chinese side. And you're right that it's interesting that they came out to say they believe they have a deal. But again, they're using this fuzzy language of a framework of a deal, and they're not giving us the details. And they're saying we probably have to wait until Friday. That means we have to get some sort of temporary extension since the next deadline is Wednesday before the leaders even speak on Friday. Then they have to confirm the details. So we really.
Now, again, China's motivated about this because ByteDance is I don't think it's the largest company, but it's one of the top 10 largest companies in China, especially from a tech perspective. So if they were, valuation over 300 billion. If TikTok were to be banned in the US, which is one of the largest, contributors to TikTok's valuation, TikTok's largest contributor to ByteDance's valuation, like that would not be a good thing. So I think the Chinese government is very motivated to make sure that TikTok doesn't get banned and we can reach a deal. The problem is, they got to give something up, and we got to see what they can give up. Hopefully something in regards to Nvidia, which would be, one of the things that the United States obviously is looking for. Nvidia 175, SoFi 2718, grab right back above 6, holding on. Google 251. Let's hear from someone who tends to be a bit more bearish and see if he's buying any of the increase in multiples that we're seeing in the broader markets.
Nvidia falling this after China said the company's violated antitrust laws following an initial investigation. Chinese regulators have not yet specified if Nvidia will face any punishments. Tesla shares surging this after Elon Musk disclosed the purchase of $1 billion worth of the company stock. Today's moves comes after a 13% rally just last week, a lot of that on Friday. And finally, take a look at Alphabet. That's now a $3 trillion market cap company. That's the first time that it has ever achieved that milestone. Fourth company ever to do so. Reason for that move this morning, but overall, sort of curious to get your take, given it wasn't that long ago that everybody was worried about their monopoly in search, particularly being eroded by the likes of ChatGPT.
Yeah, I look at Google for the long term and I go, I think they're going to have the best app in terms of AI. Because if you think about it, what makes an AI app smart? It's data. Well, they've got the most free data in the world because of YouTube. And so if you think about what's the most expensive thing to create, it's video. And so if you look at products they have like VO3 or Nano Banana, which is why the stock is up so much today, because they hit #1 on the US free app store on Apple on Friday, and they passed ChatGPT. That's why the stock's up a lot. You combine that with the fact that it's trading at a market multiple at 25 times. You've got Meta up at 27 times PE, and then you've got the AI names in the 30s. And the stock has a long way to go, especially given that antitrust remedy was way better than any of us ever imagined. They can pay to be the default, search engine. They don't have to go ahead and spin off any of their divisions. I mean, they're in great shape when you look out over the next 5 to 10 years, I think.
Yeah, rumors of their demise may have been quite exaggerated. What is it? #1, Nano Banana? That's the one that's #1?
Yeah, it's the #1. It pushed Gemini past ChatGPT.
Right.
So that's really driving this. What I think you're going to hear more talk about in a year or two, though, is their video app, VO3. Now, you can only produce about 8 seconds of videos today, but this is the worst it's ever going to be. And so that's going to give them a massive edge, especially given they've got all that YouTube content to train on for free, whereas other people like OpenAI, they don't have free user-generated content.
This has always been the bear case around some of the other LLMs. It's like, where do they get the data from? Where do they get the content from? Obviously, Google has all the content in the world, given YouTube and given the user-generated interface that they've been able to build. And the Nano Banana discussion by the suits is hilarious. But the other thing that's important is that Anthropic, again, we covered it last week, they just paid $1.5 billion to content publishers to train on the Anthropic models. Google does have a library of YouTube, which YouTube is not just the video content, it's text content because you get the transcript of every video. And that's like, I couldn't even imagine how many petabytes of data per minute that's being produced on. And I think when you sign up to YouTube using as a consumer or as a creator, you willingly give away all of your intellectual property to Google for them to do whatever they want with it. And that's been the case for like the past 2 decades. So if that makes the models better and people start using more of those models over GPT, at the end of the day, it's as quick as an app switch. I mean, it's a competitive, cutthroat LLM business, and Google theoretically should have the distribution and the balance sheet. Most importantly, they're not going to have to keep raising money like OpenAI to just fund it, which obviously would be very bullish. Yeah, Gmail has been gathering decades for decades as well. So it makes a ton. Yeah, my stream is literally training data. Literally, my stream is training data. So, I mean, from that perspective, it does not seem like Google right here is slowing down. Let's get back to Niles and see what he's thinking about the rest of the broader market. But I mean, if the overall proprietary content they have is the ability to make the models better, then it looks like there's not that many competitors to Google to be able to actually get all the data to train their models.
Massive troves of free data they can train on. So who are those companies? ByteDance has TikTok, so all that data. Meta's got Instagram and Facebook itself. Google's obviously got YouTube. And then on the corporate side, everybody has an Oracle database, right? Over 60% of S&P 500 companies. So they're in great shape. And then Microsoft with Office has got a great stronghold as well. So those are the dominant companies, I think, when you look out 3 to 5 years from now, either because they've got tons of consumer data, so they're going to dominate in consumer AI, or you're hammerlock with corporations, so you're going to dominate in corporate-focused AI. And I think the companies that aren't in either of those 2 buckets are going to have a huge problem.
I mean, just to follow up on that, a lot of the training, I mean, models have been run, inference is obviously one of the key things, not to mention products. I mean, ChatGPT has been incredibly successful on the consumer basis. Some would argue they've already won to a certain extent. And then obviously moving in the enterprise, many would say it's way too early to write them off in terms of all the different things they can move into. By the way, whether it's social and competing with Meta and on from there, Dan.
Well, that's true, but how are you going to fund it? You got to
raise a lot of money. You got to raise a lot of money. Now, their revenue growth is pretty significant. Let's not forget. I mean, they're losing a lot of money, but they are, triple-digit revenue growth right now.
Absolutely. But we've seen in the past with technology companies, the guy who's out first isn't necessarily the guy that wins, right? I think we all remember Netscape. We remember Yahoo. You can go back to cell phones, right? Nokia had dominant market share at 40% of the total market. You had Motorola then, you had RIM, BlackBerry, the Crackberry, remember that? You had MySpace and social media. And so I think I'm a big believer that the market's not going up 20% a year forever, right? I lived through 01, 02. At a certain point, if you look back over the past 3 years, including this year, you'll have had from the big 5 companies, which is the 3 hyperscalers plus Meta and Oracle, they will have spent $825 billion in CapEx over the past 3 years. The industry probably about 1.2 trillion. It's not too early to say, hey, am I getting any return on that? And if you look at the poster child for that, which you could argue was Salesforce with this whole agentic AI, the stock was at an all-time record high in 2024. It hit a 52-week low in August. Because as that MIT study said,
that's more of a Salesforce problem. We already debunked this MIT study a while ago, but this is why Benioff is complaining about Palantir. He doesn't like that Palantir is getting 100 times sales and Salesforce is getting 15 times sales. But then there's a question of where's the asymmetry, the dichotomy between who creates value in AI and who doesn't. So using Salesforce as the poster child to say there's not an ROI on AI and then backing it up by an MIT study. I mean, these are just not strong arguments by Dan Niles for why AI is not relevant or shouldn't deserve a multiple in terms of a premium.
85% of the companies that have been investing into AI have seen 0% return. It's probably an exaggeration to some degree, But at a certain point, the market's not going to say, much like in 1999 when it said every company that said they had an internet business is going in, people are going to start saying, all right, who are the names that are going to start to dominate? And it's not going to be 10 names, right? So the question is, where are you in that process? And I think we're getting closer to that as we get into 2026.
He's definitely right. We're getting closer to figuring out who are the winners. But he's also a bit bearish, the Max 7, towards the end of the year. He has this theory about like holiday spending going low, and that's going to hurt. And then he, Dan Al's been calling for this AI digestion phase for all year. That digestion phase has not happened, by the way. But whatever digestion phase he's been talking about for the past 12 months has not occurred. Google, Microsoft, Meta, Amazon, all of them increased CapEx. The only reason Nebius, Iran, and CoreWeave are getting momentum is because they are the beneficiaries of the hyperscalers increasing CapEx. Now, maybe that digestion phase happens in 2026, but we had Meta last week, Zuckerberg saying we're ready to spend $600 billion conservatively by the end of 2028, not even until the end of 2030. So if the digestion phase thesis doesn't play out next year or in 2027, even if you see hints of it playing out, but not like realistic, like, okay, these companies are taking back spend, then I think a lot of these hyperscalers are going to continue to keep spending. And obviously Oracle, Nvidia, AMD, all these guys will be the beneficiaries of it. But also we have to see what are the use cases of it, right? Robotics, FSD, agentic personal assistants. Like, I don't think we've actually entered into the age of use cases that get billions of users, which I would imagine ride hailing, humanoid robots and actual personal agents will get to the point of they have billions of users. And if billions of people every day are using them, just like billions of people use the internet every day, that is where you should start to see a lot more winners. AMD right here, 159. S&P trying to go for 661, baby. All-time high, 660.76. Trying to break 6,600, which it already broke it. If we can get to 6,610, that would be incredible. That is up 0.5% on the day. S&P was at 635 on September 1st, 632. I think is what it got to at the low, 634. And it looks like we are seeing some more momentum. Now, for those saying the rate cuts are going to be bearish because we shouldn't be cutting rates when like the economy is doing well. Again, I know it's a really kind of hard nuance to fully wrap your mind around, but the economy is not doing well as per the jobs data. And we talked about this on Friday, but if the jobs data is bearish, which it was, 911,000 jobs revised, and then 263,000 versus 233,000 jobs in regards to initial jobless claims. I mean, look, that's not good for the job market. And J-Pow absolutely needs to cut to make sure that the fact that we added 1 million jobs last year, but we didn't actually add 1 million jobs, doesn't become the same type of thing going into 2025. Anecdotally, so many of you have said the jobs market is not okay. So then the question becomes, okay, we definitely need to cut because the jobs market is not strong, even if like inflation's okay and the corporate earnings are okay. So then the question becomes, does the market sell off because the economy is bad if we get rate cuts, right? Because conventionally, if you're cutting rates, you need to be stimulating the economy. And the problem with that argument from a macro perspective is that it's just not been true for the past 4 years. For the past 3 years. For the past 3 years, realistically, since the beginning of 2023, so at the end of 2025, call it 2.5 years, every time people have said, well, if we cut rates, it means the economy is in a bad situation, and therefore we shouldn't cut rates, or we should expect the stock market to decline into cutting rates. That's not happened because corporate earnings are enough to withstand the rate cuts theoretically coming from a loss of labor market. And as long as corporate earnings keep putting up numbers, which if the labor market gets really ugly, that won't be the case. But so far, it's not gotten really ugly. It's gotten ugly. 911,000 jobs is definitely not the best thing in the world, but unemployment's still at 4.3%. Like, that's just not the worst thing. So if that's not the worst thing, I can't imagine it being, something where it's like, okay, the entire market crashes as a result of that. So as a result, I don't think it's the worst thing in the world in regards to what we're seeing with the labor market. Slower growth and higher inflation would equal stagflation. Yeah, but the problem is we're not seeing necessarily higher inflation either, right? I mean, one of the most exciting things about the PPI report that we got last week and the CPI report, which PPI was better than CPI, is that producer prices came in way better than expected. So again, a lot of this stuff is nuanced. I think we need a bit more data to kind of confirm it. But if the producer price index came in at 0.7% less than expected, and that doesn't bleed into CPI, then maybe it's not the sell the news on Wednesday that we're going to see. And yeah, Trueflation is showing a way better story in regards to inflation actually coming down versus being as aggressive as the BLS says, if we can actually trust what the BLS is saying. Inflation is going higher, but it's also not dropping, which I think is the definition of stagflation. Well, the problem is, like, stagflation to me happens when Meta grows at like 5%. Meta's growing at 20%. Stagflation happens to me when, Palantir grows at 20%. Palantir's going at 50%. When Robinhood grows at 2%. Robinhood's going at, for realistic stagflation, corporate earnings need to not show meaningful growth. And right now, again, we talk about this stat all the time, but 80% of S&P 500 companies that reported beat earnings by an average of 7%. That is unheard of. That has not happened for the past 5 years. So regardless of the idiosyncratic macro arguments for why inflation is going up, unless the labor market crashes, which is not happening yet, and if it does happen, that's even a better argument for rate cuts, or inflation massively accelerates in the face of the job market starting to or corporate earnings starting to meaningfully come down, then I don't think we get stagflation, or at least not as easily as we would imagine. Duolingo, how's that one doing? 292, that's down 5% on the day. Tesla right here, 417. Nvidia, 175. S&P still holding 660. Grab still holding above 6. Again, went to the gutter at 560 this morning and kind of came back at $6 here right now. Here's a video from China. This is the iPhone store in China. As you can see right here, flooded with buyers. iPhone 17 starting to get a lot more momentum in the country. And I think this is one of the reasons why Apple is up as well. I mean, if you got iPhone 17 growth also taking place, this is kind of the 3-year upgrade cycle a lot of people are looking for. That is also bullish for broader GDP growth. Obviously, Apple's earnings growth, but also proves the argument that, hey, maybe we're not in a stagflationary environment if these many people want the iPhone. And then you also have just a broader argument that, okay, if the iPhone 17 is like the hardware that is necessary for AI infrastructure, which, hopefully that's going to be the case with Apple's release of a upgraded Siri, then that's another bull case for Apple going into 2026. In terms of what's going on with Hood, again, Hoodie, I think this is one where it was stagnating at 95 to 100. It has moved on from that phase. Now it's at 115 to 120. I don't think the next phase of Hood being stuck between 115 or 120 is a bad thing. As much as I would love for it to go to 130, Hood is still an expensive name. I know the growth is there and the growth will continue, which could, continue to allow the stock to appreciate. But I think expecting it to go to 125, 130 overnight, although I think it could be justified from a variety of different angles. If it chills out from 115 to 120 over the next couple of weeks before earnings, I think that's okay. Obviously, high beta momentum would continue to carry it, but that might take some time to get there. Yeah, Hood's down 0.5%, so the show's over. This thing was stuck at 100 for almost 3 weeks, and we finally got it to break out. So I'm more impressed that it broke out. S&P 500 news kind of caused the breakout. The rebalance is happening on the 22nd, so next week. And it might move the stock, it might not, but I would just like us to normalize above 100, which kind of is what most people are waiting for now. This is Ed Yardeni this morning and his take on kind of where he sees FOMC going later this week.
Now, baked into the cake already is a quarter point. So after that happens, let's say that happens, does the market go up on the back of that news because it's confirmatory, or does it say, we were actually hoping for more?
Yeah, well, I think the market's hoping for 25 and would be pleasantly surprised by 50 basis points. But 50 basis points really would create a melt-up situation in the market where I think you'd see the market going up too quickly on valuation. Right now, valuation isn't cheap. We've got a 22 times forward PE. This has really been an earnings-led bull market. We took that dive. Remember, the last recession was during the pandemic and only lasted 2 months. And then it took us a few months to recover. And since that point where we recovered what we lost, we're up 100% on the S&P 500 and forward earnings are up 100%. So it's been a surprisingly robust earnings environment, especially this year in the face of tariffs, DOGE, and all the other policy uncertainties.
And so when you think, though, about the unevenness of this market, you talked about earnings. Yes, 22 P of 22 on a forward-looking basis.
Not cheap.
But not cheap.
No.
But super uneven, meaning there's some companies that are pulling those numbers in crazy ways.
Yeah. Well, you're right. I mean, the Magnificent Seven are about over 30 times forward earnings. And then what I call the impressive 493, I think they have been impressive, and we'll get even more so. I think, those multiples are around 19, which isn't dirt cheap, but it's certainly fairer value than what we're seeing in the Magnificent Seven. But the Magnificent Seven have demonstrated over and over again that something that we haven't seen, I think, ever in the past, where large companies just grow double-digit earnings.
I want to just go with this idea of just how strong the economy is, because you're saying you believe it's actually very strong, to the point where I think you might not even cut a quarter point.
Exactly. I mean, I kind of see a similarity between now and what happened last year. Last year, the Fed lowered interest rates by 100 basis points from September to December, and the bond yield went up 100 basis points because it turned out the economy wasn't all that weak and inflation wasn't at 2% yet. It was still elevated around 3%.
So do you think that the reason they'd be doing this is just because of the political pressure? What's your thought here?
Well, I think it's the political pressure, but they also have obviously an excuse here. I mean, they are data dependent, and they don't necessarily agree with my interpretation of the labor market. The labor market data has been weak. There's been a downward revision, but I don't think the GDP numbers are going to get revised. So I think the productivity numbers are going to get revised up. If we've got now productivity-led economic growth, then interest rates are basically where they should be. If they lower them, then the risk is that you get a melt up in the stock market, and then you get a meltdown.
So you look at.
So this is actually a bit similar with what JP Morgan said as well. So JP Morgan said stocks may stall on Fed cuts. JP Morgan warns U.S. stocks could cool if the Fed restarts rate cuts this week. Markets are near record highs despite weak labor data, but history shows equities often pause after easing begins. The bank stays bullish on emerging markets and mining stocks. Emerging markets, maybe that's why Nubank and Grab are catching a bid, favors long-term bonds and expects the U.S. dollar to fall 4 to 5% in the coming months. That could also be another reason why Grab's getting some momentum. A weak U.S. dollar is actually pretty good for Grab because they report in dollars, but they accept currencies from 8 different countries in Southeast Asia. So one of the arguments could be a little bit of a rotation in the institutional management of money, saying, hey, risk on might turn into risk off in the United States. And let's get into names that haven't really moved all year, but that are growing. Nubank, C Limited, although C Limited has had a great year, and Grab are some of the names that pop up in terms of international exposure. But going back to the argument about, hey, are rate cuts bearish? Technically, yes, because the economy is slowing down. So we need to cut rates to re-stimulate it. But the real fine line to walk, which Jay Powell has been trying to walk this line very carefully for the past 3 years, is, hey, how do we cut rates in a world in which earnings are good, labor market's not that good, inflation's kind of accelerating, and then some metrics show us it's kind of deaccelerating, and still maintain the health of the economy to not get to negative GDP growth, 2 quarters of that, which would be a technical recession. Now, we just had 3.3% growth in Q2. If we get anywhere near 3.5% over the next couple quarters, I think we can withstand some labor market weakness. Now, one could argue, wait a second, how do we get labor market weakness that's dramatic enough to cut rates and 3.5% growth? I don't know. But in a world of AI, I mean, the one argument I can give you that starts with an M is margins. If margins go up, maybe that is the way that even though jobs come down, which would be a byproduct of margins going up because companies might not need that many workers, productivity and efficiency goes up, which still could increase overall GDP, even if you don't have job growth as strong as it is, and kind of lead to a deflationary effect more than an inflationary effect, which actually leads the Fed to continue cutting. I mean, there is just, and then that's what Evercore's argument was last week about creating an asset bubble, to the point where they said S&P could hit 9,000 if rates come down to the point where Trump wants them to be down, which is 2% rates, which I don't think we'll get there, but let's say at least 3% by the end of next year. And you've got the earnings growth led by productivity. Even if you got some weak job data, that could still lead you to a thriving bull market. It's just a question of seeing how all that ends up playing out. Not to mention, obviously, all the crypto tailwinds that could be playing as well. So, and then you got housing, correct? That's going to be unlocked, which, by the way, mortgage rates are the lowest they've been in a long time. 6.19%. It's the lowest they've been in basically in the past 2 years or the past year and a half, which could also be another tailwind to the broader market. Could potentially increase some headwinds given what's going on with the housing market in relationship to mortgages that might be underwater. I mean, there's a lot of controversy around what's going on exactly with Fannie Mae and Freddie. So there's a bunch of nuances to this entire thesis, but I think over the coming weeks, once we get through FOMC, we'll have a much better understanding of what's going on. 299 on Oracle. That's up 2.5% of the day. It is down from its intraday high. Grab right here, 604. Again, very, very impressed that Grab has been able to hold $6. Google just below 250, still a $3 trillion company. SoFi right there, 27.39. Tessie holding on to a 5% day, adding about 120 billion in market cap. Reddit right here, 257. Meta, 758. And then Hoodie still red, 114.22 on the day. Do you think FSD 14 will pump Tesla? I think Elon buying $1 billion worth of Tesla was the most amount of, or was the most exciting catalyst to pump Tesla, like literal PUMP. I think FSD 14 hopefully will help, but Elon buying, I mean, I can't understate how bullish that is. Now I know he's setting up to get $1 trillion compensation. He's buying $1 billion worth of stock, but it's the first time in 5 years, and $1 billion is $1 billion. At the end of the day, $1 billion is $1 billion. The fact that he's willing to let go of $1 billion at 389, which one could argue the earnings are not going to be good enough to justify anywhere near 389, is him saying, I think the street will pull forward the growth because the growth is going to be obvious that it's coming. Yeah, at a fairly high price, right? Like Elon's not stupid, dude. Elon has tweeted multiple times, I think the stock is too high. So at 389, given the earnings growth, which is non-existent, I think Elon's not an idiot. He could say, the stock's pretty high. But if he thinks the earnings growth is coming, and Elon has been saying for the past couple of quarters now that FSD is going to hit its inflection phase, maybe that's why he's ready to buy. S&P 4 cents away from 661, folks. 1 cent away now. Let's see if we can break 661. That would again be all-time highs on the S&P 500. Yeah, he did tweet, "You'll thank me later," which, by the way, was the name of a Drake album, which is an iconic Drake album. But as you can see right here, on September 7th, he did tweet, "You'll thank me later." Maybe it was in reference to him eventually buying back some stock. Falling Knife, thank you for the $200 super chat. Appreciate you, Falling Knife. Thank you for being here. Thank you for the $200 super chat. Muckabee, thank you for the $20 super chat. What's up, Amit in chat? Much love to Amit, fam. So what is your plan for Wednesday? Trimming prior to Wednesday FOMC or holding? I am holding into FOMC. I would not be trading into it. I mean, I don't think there's much of a trade. I mean, you could obviously hedge if you want to buy some puts or sell some covered calls, but like actually getting out of positions before FOMC. Like, is FOMC a market defining event where the entire market not collapses, but like really takes a haircut towards the end of September based on a rate cut? I don't think so. Could I see that happening? Of course, especially because we've had a really good 2 weeks, but not enough for me to be like, all right, I'm going to get out of everything or get out of a sizable amount before FOMC. So yeah, I'd be holding, but I mean, having a little hedge into it is not the worst idea in the world. Roger, thank you for the super chat. Hey, Amit, I have a 410 covered call on Tesla. What should I do? Should I roll them? Yeah, I would roll them by now. If it's expiring soon or even in a couple weeks, you're well over your break even. Now, obviously, Tesla could fall below 410 easily if the entire market takes a little bit of a breather. But at this point, at 418, you're probably above your break even. I would roll. Probably try to get to 430 to 450 a couple months out, or roll it to like 425 a couple weeks out. But if you want to keep the shares, then right now probably would be the time to roll. BMNR, is that one moving? BMNR 52.19. That one is down 5% on the day. Again, you just can't complain about volatility on this. If you get into the stock thinking it's a straight moonshot up forward, I think you'll be disappointed. You have to be willing to deal with the, I mean, I got in at 49, wrote it down to 40. Now it's at 52. I'm easily expecting it to go back to 49, but I could easily see it getting back up to 55 if ETH pumps. So this to me is more of a name to farm the volatility on, even if you want to be long Ethereum. But it's not a name to expect consistent gains, because if ETH tanks, you know, obviously BMNR will take a bit of a hit as well. You guys are making fun of how I said his name. How did I say his name? It's Roger, right? It's Roger. Oh, I said Roger? Oh, shit. Did I really say Roger for Roger? That's, well, that's, that's life. That is life. Angry, thank you for the super chat. Earned 94,000 in option premium in 3 weeks since my first contract on August 22nd. Huge thanks to Amit. Your content gave me the confidence to DCA to options. Incredible. Not too bad. I imagine you say option premium, meaning you sold calls or puts. So incredible stuff. Congrats. 94,000 in a couple weeks off selling your first option contract is amazing. Again, I see these tools as income generating, but I also see these tools as a way to hedge. And if you have a portion of your portfolio that you are okay with either being assigned on or selling, like if you buy 100 shares of AMD and you're okay with them being sold at a certain price and you're able to collect that premium as income in between the buy or the selling of the contract and then the selling of the shares or the rolling of the contract, then I don't think it's the craziest idea in the world. So I think it's an incredibly powerful tool, and congrats on making some of the profits. Bro is making the bull case for Duolingo. I absolutely am making the bull case for Duolingo. Let's go back to the stock draft real quick. As you can see right here, 22%. I'm up down 38% on Duolingo. Matt's up 27. Tanner's up 15. Steve's up 4. And then Chris is up 8.4. You can Roger that. You can Roger that. Grab back above 6. All right, let's bring on some people to the show that can definitely speak better English than me, even though they're not from the United States. Ladies and gentlemen, let's bring on Mr. Emir and Arny as they drag their chairs over. There you go.
Here we are.
Here we are. Let us know if you guys can hear it. Should be okay. Let me see if you guys can see them. Boom. We're live, baby. What's up?
Directly from the cave. But where are the bricks here?
Yeah, there's no bricks here. No bricks here. So I know we have to do a Palantir weekly. We ended up going out and we got out to a Palantir weekly. But in general, we're probably switching Palantir weekly to Palantir monthly. That was going to be one thing that we announced because it's like, there's just not enough news to talk about every single week. I mean, we did it for 3 years, every single week. So now it's going to be every month, and we'll try to get more valuable content in that monthly episode versus weekly. But yeah, now we're here, and these guys are leaving back from the United States today. So I guess question, Emir, how was your second experience to the United States?
It was amazing. I really enjoyed my fellowship with these two guys. We had so much fun. New York as a whole, if you can get over the smell, it's a really charming city.
What kind of smell?
It honestly smells like urine, like throughout the whole city. If you can get over that, it's a pretty charming city, you know. Pretty similar to Sweden, actually, how cold everyone is. I like that, being left alone. But yeah, it was an amazing visit. The opportunity to meet Amit and Arny was truly great. They are funnier than they are on stream. Let me tell you. You guys don't know you guys don't know these guys. Yeah.
Did you feel inspired looking at the skyline in New York and all that stuff? You know, was it like motivating?
You know, walking around in the finance district in Manhattan, I thought I would be like, oh man, here's like where money flows, but I didn't really feel that. I don't know about you guys. But yeah, beautiful view, beautiful city.
Okay. Arny, this is your second experience in New York.
I think what you are saying is exactly the representation of how stuff work. On the ground, you just have a mess. But the higher you go, you know, the more money's made.
Yeah.
We did not see Tom Lee walking through New York. But no, I think it was fun, dude. I just think it's very, I think, cool for people that like believe in capitalism like you guys and believe in markets and all this stuff. New York is like the center of all that stuff. So it's really cool to kind of see all that playing out. Muckabee, thank you for the $100 super chat. We have definitely gone out to dinner quite a few times, but we're probably going to get lunch after this as well. So thank you for that super chat. I will be
treating them to lunch here, and thank you for being here. What do you think of the food? Is it better than Sweden?
Dude, honestly, even like the street food stuff we got, everything was good except when we went yesterday and got the Wagyu burger. We've been so hyped about the Wagyu meat, but the burger we got yesterday, it was
in an Italian restaurant.
Yeah, it was trash. Outside of that, food was great. We tried like a big variety. Me and Arnie were big, like, oh, let's try all the American fast food places that we hear about. Let's do some DD.
We weren't able to get him Chick-fil-A because it was Sunday yesterday. Maybe we'll find a way to get you Chick-fil-A today. But we were so hyped to go to Chick-fil-A, and we got there and we're like, wait a second, it's Sunday.
Bro, let me tell you, everyone go and short Starbucks. That chain is not operating efficiently. Let me tell you, every Starbucks we went to, so slow. Staff is not really doing their job. Man, go short Starbucks right now.
Yeah, but isn't it truly interesting seeing how your
it deserves that.
exactly that. Look, it is interesting to see how the real experience as a customer then can be reflected into the business, and then when you see also the stock going down, you see why. And yes, we had this bad experience at Starbucks.
I've never been to Italy before, but we went to Italy and we thought the Wagyu burger would be amazing. It was not, dude. It was.
I'm sorry.
I'm gonna take these guys to Popeyes today as well. They've never you never had Popeyes, right?
No,
never had Popeyes, but I've heard about it. Isn't it Popeyes where there's always a fight? So I'm looking forward to that.
Okay, yeah, we might see a fight, but maybe they'll enjoy the chicken sandwich there. Okay, let me ask you guys some questions about some stocks because we all three care about certain stocks. Let's start with Hoodie. We saw the summit, you guys, S&P 500. Arnie was with me around $8. We got into it. Emir kind of got into it around 2030 in the April tariffs and just like immediately realized it was a fantastic opportunity. So we'll start with you, Emir. Your thoughts on Hood as a company now?
I think Hood is one of those underappreciated gems. I really didn't give it a fair shot, but once I actually looked into it, I saw like, dude, this company, it's an execution machine. I mean, you can already tell by how much they're actually innovating and rolling out features like immediately. Like they announce something, it's already out, like with the tokenization and stuff. And I think once we get over this initial phase where there's a lot of cyclicality due to, market, trading revenues and stuff, but they are quickly scaling out every other aspect of their revenue. So I think they're quickly diversifying, removing that cyclicality more and more. And I think, they really are finding ways to monetize their users. And I think for me, last I did work on it, fair value for me is about 135 to the story that I can understand as of right now. So I still think it's attractive. And I read someone on X was like, oh, but the chart is going up. I can't buy it. Like, it's been going up. I'm like, dude, look at Palantir. That chart was going up and into the right for a long time. It doesn't mean that it's like a bad time to actually look into the company. Like, you're not too late. Just get over that feeling of, oh, I missed out. Just have a look now. Trust me, it's worth having a look.
Arnie, your thoughts on Hood?
In the same line of Palantir, every time I start feeling, oh, I'm not that bad as an investor, I get some humbling lessons. And it's quite fascinating to see how these two companies, despite they are very different in the kind of market they operate, in reality, they have many points in common. That I made a post the other day because while I was taking the flight to come here, I had at that moment of, how come we got so lucky twice? And there must be something in common because it was too wild not to really think of it. So it's really fascinating seeing there are some common things between them, like obsessing over customers before revenues, how grinding is the CEO, which comes from a background that is different from the industry where they operate. If you think of it, it's crazy. You have people working finance for 40 years, still not being able to do a finance company. You have people working an entire life in tech, and then you have a philosopher making the best software company in the world. So it's fascinating, this journey. I'm so happy to share this journey with you guys, with all of you.
Yeah, it's pretty incredible. Arnie and I were reflecting a lot on just like how we kind of understood Hood and Palantir, and again, we're trying to find this third one, which is the hard one. So let me ask you this question real quick, Arnie, because everyone has been asking me for like 5 months now. Accelera. Can you tell them what you told me about how you're thinking of Accelera?
Okay, this is not the kind of company that is compounding right now, because it's like a company that is in the earliest phases of something that can be potentially a juggernaut, but the good stuff take a lot of time. If you think of it, Palantir took 20 years before it reached to the point where the platform they built for 20 years start really compounding. Accelera, for this nature, is a slow business. So you need to understand what's the structure, what you're actually investing into. And the way...
Which, by the way, is why Arnie doesn't have a price target. Because you can't really have a price target on something like this.
Yeah, like you can make a model, but for every company, the assumptions are very hard to guess. In something like this, you have extreme variety of what can happen, and each of the output can have or a zero or infinite impact. So that's the reason why I like to frame it into the simplest terms into, okay, this company is trading more or less at cash, which means that you're not really paying for any flow that is generated. You just buy for free the cash inside. But what do you have? You have a platform and some molecules. This platform generates these molecules that potentially can go into the clinic. And the entire thesis is this portfolio of molecules is not just static. It's not that you just buy this company, they have these 18 million molecules, and you pray they go through the FDA process. What I think is very interesting, and the reason why I'm excited about this company, is they're building this engine so that they can replicate the process of discovering new molecules, which means the more programs they have, the more data they have, the more processes they can start. And over time, they can generate more and more antibodies, potential antibodies, becoming faster. And what you end up having is not one molecule, not 3 molecules, is an entire portfolio of molecules that keeps generating itself. So,
and that is like, it's make or break, right? It might work, it might not work, which is why I know the stock has moved, but your frustration has been with a lot of people like constantly asking for an update when you just can't. No.
Look,
this is not a quarterly update type of thing that they can really do. It's either the drug works or it doesn't work. Maybe it works in year 5, maybe it works in year 2.
Look, I never say never, because Jack showed me some information that made me really realize into, okay, potentially something can break out of the sky, something like a partner actively purchasing some rights to deploy the platforms Accelera is building. I don't really think Accelera is really willing to pay for an exclusivity, but that's a potential and still an information that makes you think, oh, this stuff is valuable. Because again, at the current price, you are paying for the cash and the engine. This engine right now is not worth very much because all the molecules are in very early stages. But the idea is you need one to start really creating this flywheel spinning a lot. You're paying for essentially nothing, but you're really buying an option generator, as if as the more you work, then the more options are automatically generated. And the more options you generate, the higher the probabilities of each option to get in the market.
Last question on this. How much of your portfolio? Less than 1%? Or
in my trading portfolio is around 5% or something like that.
Okay.
Overall is definitely less than 5%. Is 1-2%.
Okay. Amir, Palantir. We had an event at Palantir's office in New York. We were able to meet with some of the executives. We got a bunch of merch. Iliano set it up. I think a lot of you guys have seen some pictures of it. How was the event like? And in general, stock at 168. It's best performing S&P 500 stock all year. Thoughts on Palantir in general?
Definitely, it was very insightful. It confirmed some of the thoughts that we had going into it. It denied some others. Like it's always difficult from the outside. Of course, when you're inside the company, you know best, but you can't really make use of the information. So it was great as an opportunity, especially to meet everyone there. Like too many to name, all great investors. But as for Palantir, I think. I know some people perceive it as extremely expensive, extremely overvalued here, but the way that I understand where this company is going right now is very different from even just a quarter ago. A quarter ago, my fair value was somewhere around 70, 75-ish. But given the recent quarter, like how AI FDs are going to improve margins, how they're going to 10x US revenues in 5 years without increasing headcount, when you take all of those things into account, honestly, the work I did on Palantir, 165 appears to me to be somewhere around fair value. Actually, 170 is not that crazy as it may appear simply based on multiples on PE, price to sales. But if you actually value the company with the story that we have right now, I think Palantir is actually trading around fair value here. And I mean, it sounds crazy to say, especially given that my fair value was just 75 a quarter ago. But I mean, so much changes with this company. They are like we talked about Robinhood executing. Palantir is also making like massive moves. Who knows what do they have in store for the next quarter? I mean, the impression we got is that Palantir is not standing still. Their
margins are enhancing so rapidly too, which is why like it's hard to get to fair value off just 40-50% growth. But the bottom line growing, like it's
when you actually do the margin work, and you're like, dude, this company, there's no reason they could not have 70% free cash flow margins. Do you know how insane that is? That is like we're talking like FICO levels kind of free cash flow margins. Like this company is so efficient with the amount of operating costs they have. It is completely insane, and I think the market is catching up. I to be honest, like. We criticize analysts. The market has gotten Palantir correctly so far. Like the stock has been moving up and to the right, but to be honest, like the market got Palantir. Like it is actually trading where it should be trading the way I see it. So yeah, I mean, Palantir is truly one of a gem. And you talked about, what's the next Palantir? I'm sure you guys hear it as well. Like, you got Palantir, you got Hood from 8 to 100 plus. Like, well, when's the next Palantir? I mean, you guys, you don't understand what a like gem this was in the market. It's not easy to find the next Palantir, guys.
Like, I think one day it'll pop up, not exactly like Palantir, but a stock that will go from 8 to 100 in the time that Palantir. But I don't know if that takes a decade for that to like. It's hard.
We might not have one like for the rest of our investing lives. Like you guys don't realize how rare this is actually to happen. It is insane. And this company. Oh man,
the culture too, getting to talk to some of the employees, and same thing with Hood at the Hood Summit. I mean, these guys were telling me they work Sunday nights because Vlad sets the culture, Karp sets the culture. I mean, it is hard to find companies that are that founder driven and that actually have TAMs that they're executing against at just like speeds and velocities that the stock market, that Wall Street has never seen. So we got to see.
Yeah, but look, also Goldman Sachs works at a Sunday night.
That's true. We went past the Goldman building last night, and they were definitely.
What's the difference,
dude? That tweet went viral, bro. I woke
really?
up.
It did?
It's like fucking 130K views now. I don't know what the fuck.
Yeah, look at that. Yeah, we were walking past them. Yeah, they were the M&A department.
We were seriously making jokes of imagine there must be so many people working around there, like Goldman Sachs, the M&A department. And we looked at that's actually Goldman.
We're like, dude, that is the Goldman building. And I posted it, dude. That shit went viral overnight.
It is just so hard to find these names and to like really think they have a shot of doing it. But I would say the next Palantir for now is Palantir if they keep growing the way they're growing. And
dude, we're still early. You guys don't understand. You're looking for the next Palantir. I mean, Palantir is just getting started. We are at like less than 900 customers. Salesforce has 200,000 customers.
Yeah.
Like, do you know how early we are in this story? Like, it's just getting started.
Yeah, but that's the issue. Right now, we see the market is appreciating Palantir. Everybody loves Palantir. Is there any chance that the market still is failing to see some angles that we as investors see? Or is everything already incorporated in the price?
To me, everything is incorporated the way I understand it, but there's always the risk that even I don't understand some dynamics. Like we've seen that, as I mentioned, like intrinsic fair value doubled in 1 quarter. So obviously I was missing something. That could also be the case now, that we're just not seeing some of the dynamics with the company that will be revealed over time. Maybe next quarter, maybe in 2 will double intrinsic value again. Like it's that kind of company where that's really hard to understand.
Okay, I'm making this question because we obviously see everybody's appreciating Palantir for what it is, the numbers it is delivering, and so on. My impression is very few people actually wait, not what Palantir is, but what they are developing that could bring the other legs of growth. Like you don't really hear analysts talking about Warp Speed, which is potentially an entire company on its own. The AIFD is something that, from what we see so far, is like potentially groundbreaking. Imagine having Palantir FD working with a customer right now is the biggest friction to start delivering value. If you can shrink that time even more, the amount of value that can be generated is insane, because it means more customers, more faster adoption, faster proof of, oh, if you can help me deliver 1 million saving in like 5 minutes. Okay, I'm exaggerating, but that is way more striking than showing a $1 million saving in 3 weeks of work.
And Mizuho got a demo of it over the weekend when they went to the Palantir offices, and they kept the price target at 165. But they're like, hey, we saw AIFD, and like, yeah, we can imagine customers not needing Palantir's physical human labor to optimize their business, doing it via AI, not everything, but optimizing all the nitty-gritty parts. And that just makes their human labor more productive, which goes back to Karp's argument about also not increasing headcount.
Do you remember that sentence Karp said, a year of time is not a year for Palantir. Like we take the time, we compress it.
And then 50% less again. Yeah. Half it again.
And this AIFD could be potentially the thing that takes the company and makes it scale even faster. Because in my eyes, even if we are seeing these crazy margins as of today, when I see stuff like AIFD, I start thinking, wait a second, there is no ceiling.
Yeah, there is no
the
ceiling.
product is already out. It doesn't cost more. It's an AI agent at the end of the day.
Yeah, it's also the biggest pain point for Palantir, which was like building a good ontology for the customers, because the customers, like, they are the one who know their company the best. So they're like, how do we make this ontology good? And Palantir's like, well, it is your ontology, you should know. So that really solves like one of the biggest pain points for FDs. But I also want to comment. We have.
I was going to ask. I already told everybody. So you told me PayPal's doubling.
No, wait.
We have proof. We have proof.
Well, let's get to PayPal. So I just want to comment about Mark Benioff's smear campaign on Palantir. Like, he does not realize that it's actually an ad for Palantir. When he says, oh my God, Palantir can charge so much more than us. Have you guys seen the price list? By the way, have you guys seen the price list? He said it's out there. I've not seen the price list. But dude, he is doing so many interviews now where he's just smearing what Palantir is charging their customers. Like, he doesn't realize that it just shows that his company has no pricing power, while Palantir seemingly has infinite pricing power. And that's another dynamic with Palantir, because if you can save a company 10 billion, do they mind paying you 1 billion per year? Like that's the infinite scale of Palantir that some people are missing. They're like stuck in this mindset where, like, yeah, you pay for software like 5 million a year, 2 million a year. They don't realize that the way Palantir is structured, the more value they can extract from the business, the more they can charge the business. Like, it is infinitely scalable. Like, if you can do 100 billion in savings, like, you might get 5 billion per year. Like, it is a dynamic that's really not, doesn't really exist.
And in SaaS, we just haven't seen that.
Yeah.
Which is why I think the street's giving it a multiple.
look, we see how insecure Benioff is.
Yeah.
From, we swear we are not in crisis. We swear it.
Yeah, that was so funny. I don't know if you saw the quote, but apparently he had a call with analysts. He's like, guys, we're not in a crisis. And none of the analysts actually suggested that they were in a crisis. He's like preemptively like, guys, I promise, we're doing good. We're not in a crisis. I'm like,
that was like me yesterday. I told these guys, like, guys, you know I'm not actually gay, right? I know the chat, like, and they're like, someone, you kind of sound a little guilty. And I was like,
suddenly out of nowhere, walking the streets of New York, he's like, guys, I'm not actually gay. Guys, I looked at Grindr, but I'm not actually gay. I'm like, dude, why did you just drop that out of nowhere? Like, suddenly,
I don't know what we were talking about.
No one suggested it.
No, but I don't know what we were talking about. I just wanted to make sure my friends knew, like, guys, I know the chat thinks this, but like, I'm not actually like, and they were just like, okay.
I was seeing this guy, like, one was not enough. He needed two people.
Oh my god!
Just trying to make sure you guys.
Dude, I felt kind of unsafe sleeping at Amit's place.
Oh my god, bro! This
dude,
guy.
I was protecting the booty hole.
Anyway, this is Arny drinking his first American cappuccino.
Yes. Okay, Arnaldo, first American Dunkin'. Should taste like it should taste. It's a cappuccino.
Yeah, hot cappuccino.
Okay, so it should taste like freedom, liberty, and capitalism. Capitalismo.
Il capitalismo che vince. Vediamo.
I don't know what you said.
Is it better than Italy?
I would not say so. But I have to confess, America is making its best to challenge the status quo of the perception that America is not able to make good coffee.
So obviously that Dunkin' was a joke. He's been to other coffee spots in New York, but have you had any coffee espresso lattes that live up to Italy at all?
I mean, the cappuccino we just had was actually good. It's the way it is served. Like here, coffee is more something you take to go away. You take it to consume. For us, that is espresso. It's something you just go at the table, you order it, you go. If you just sit and talk, like that is more the kind of stuff we do. The idea of walking around with a cappuccino, the coffee, whatever, is not part of the culture.
Dude, never mind the coffee. He had New York pizza, guys. Dude, I was stressed.
Did you enjoy it or no?
Did you enjoy it?
Yeah, pizza was good, man. It's on my ex, like Arnie consuming some Joe's pizza, and he told me, guys, I'm gonna tell you uncut. He said it was 8 out of 10.
It's not bad.
Yeah, that's.
I mean, for a street food
from an Italian, 8 out of 10, bro.
I mean, for a street food, that given the context, we were in Wall Street. That was good. I can't imagine bankers having that.
It was packed.
If it was for a restaurant, that would be barely a pass.
How do you say espresso?
Espresso.
Wait, you say espresso?
Espresso.
Everyone's spamming that. That's how I guess I do.
With an X?
I don't mean to say it like that. It's just like espresso.
Espresso.
Master debater.
Espresso.
Espresso.
Espresso. Okay.
You know why I emphasized in the video cappuccino? Because when I was in the UK, each time I was asking for a cappuccino, the waiter looked at me and like, oh, what are you talking about? A cappuccino. A cappuccino.
Yeah, there's definitely a little difference in terms of pronunciation. Okay, PayPal. You said it's doubling in 180 days. Are you BSing? Like now you can tell everyone, like, were you messing with me or like you're serious?
I don't know. Like, is that footage out there?
Yeah. No, well, it's not posted. But we have
like Arnie has 2 sessions recorded where I'm talking to Amit about PayPal. I'm like, dude, bro, this thing's worth double. It's going there in 2 quarters. Is pulling it up.
Half a year. No, half a year. In 6 months, you think it doubles?
Yeah.
Dude, if you're that confident, if you're that confident,
I'm gonna buy fucking 1,000 shares.
2 quarters. So it's going to be 140 in 2 quarters. Well, it's 2 quarters. They are at the inflection point. Dude, I would buy 1,000. That's because you said that?
Okay, well, 2 quarters.
Bro, look, I'm telling Amit, I was like, dude, do you still have your PayPal leaves? He's like, no, I sold them 2 years ago. I'm like, dude, we've been back holding for 3 years.
And I lost like $5,000 on that. So, okay, so seriously, do you actually believe in 2 quarters?
Yeah. I think, look, the dynamic with PayPal here, it essentially has no downside. This stock cannot go down more because they are repurchasing so much that the company would be taken private in like within 3 years if it went down lower. Like it has no downside. Like it just theoretically does not, because they are like committing 100% of their free cash flow towards buybacks. For this year, it's $6 billion. For next year, it's probably gonna be more. It's trading like $50 billion market cap. Like, dude, it makes no sense for it to go down. Now they're actually starting to have some catalyst. That's the only issue PayPal had. They had this transition period, new management. They had all of these grandiose ideas that they're like, well, yeah, we're going to make a guest checkout better. We're going to do ads. But they actually had no catalyst to bring the stock up. I think within 2 quarters, we're going to start to see some actual financial results from all of these new projects. And I think, yeah, we're probably going to be at fair value within 2 quarters, which is double from here. And everyone's going to be like, oh, I missed out. No, I'm not giving you advice to go buy it. I'm saying this is the way I see it, and this is the way why I still hold PayPal. But I really believe that PayPal is one of those really overhated names. It has no downside due to the buyback dynamic. They're still growing.
Yeah, but wait
They're
a second.
finally going to have some catalyst to actually go upwards.
You say it has no downside, and this has no downside relies on the assumption that the operating machine will remain at least as good as it is today.
Yes.
On my side, it's not that I think it will go bars or whatever, but I have a sense that we are suffering from all sides, and I would not be so confident into saying the operating machine will remain at least as of today. What makes you think so?
No, I think they might lose market share. They have been losing market share in recent times because they're focusing on escaping the rat race. So the problem that PayPal has had is that they are competing with Stripe and Adyen, other big payment
providers.
Yeah, like PSPs, payment service providers. The thing is, they each undercut each other all the time. So the margins for everyone participating there is just going down and down and down and down as they are competing for the same market share. PayPal exited that. They're saying, no, okay, we're going to sacrifice growth, but we're actually going to increase margins because we actually have the leverage to increase margins because they have this, what they call the vault, which has like 350 million connected merchants. They can share all the consumer data. They have the most consumer data out of any company in the payment space. I mean, I think something like 35% of all issued credit cards in the world have passed PayPal's vault. So it's like it provides value to be connected. So they can actually say like, no, we're going to increase margins, but we're going to provide you more value. We're going to get you better conversions. We're going to get you like, so they're exiting that race. They might lose overall volume and some market share. But the question that Arny is saying is that, no, they're actually going to stop growing. And that's not the case. I don't see a scenario where they actually stop growing. Like this company is actually very robust beneath like the whole stock price chart. Like if you actually look at the company, it is still very robust. It is increasing the value they provide to the merchants. So yeah, I don't believe that what Arny is seeing and what the market is implying too. The market is saying like this company is going to stop growing. They're going to go negative, but it's just not happening. So I believe 2 quarters, we're going to have some positive catalyst. It's finally time to see the thesis play out. So 2 quarters, when I told Amit that, I was not joking.
Like, bro, if it doubles in 2 quarters, it's the best buy in the market.
Yeah, that's what I'm saying. Bro, I made a whole article like 2 weeks ago. I said, this is the best risk reward in the market. It's fucking long. So if someone is interested in PayPal, it is available on the Substack. Am I allowed to?
Yeah, of course.
Am I allowed to? Yeah. So research.typefcapital.com, it has the whole PayPal thesis. Like, just go read it. Like,
okay, I'm curious about your thinking process. You have an opportunity like this where you believe the downside is pretty limited,
Yes.
but in terms of risk reward, you see potentially a very good setting.
Yes.
What's your thinking in terms of how much you should allocate into something like that according to the overall approach?
Well, historically, when I made these community-based mock portfolios, I put PayPal at like 30%. Obviously, it's been a pretty fucking bad 30% for the past 2 years, bro. But like, I would be confident having like 30% of my portfolio in PayPal. But right now, I still believe that Robinhood is a more exciting company. I believe that Palantir is a more exciting company. I believe FICO is a more exciting company at this price. But after FICO, PayPal, my fourth biggest.
What do you guys think about Tesla and Elon buying stock? Bullish, bearish, don't care?
He bought stock today?
You didn't know?
No.
He bought $1 billion worth of stock this morning or on Friday.
That's a pretty strong signal, actually. I'm surprised. Dude, I don't know if he like masterminded his way through this, but dude, I was so skeptical. I was so bearish when he started doing the political stuff. Like, yeah, I'm making a third party. I'm doing this. And I'm like, dude, you're about to launch robo-taxis and you're like getting in the way of the administration. You're like making enemies out of everyone politically. I'm like, bro, I don't know. So Elon, you always get this. Like, if you own Tesla, you have to be prepared to like weather some fucking difficult weathers. Like you have to accept that Elon will stir some shit from time to time. And to be honest, I'm very excited to see that he bought stock. I still think that Tesla at 400 is pricing in too much optimism about Optimus. We don't know how well it will sell, how well it will scale, how quickly it will get to market, at what price, what adoption rate, what markets, the regulation surrounding it. So when I value Tesla, I exclude Optimus completely, but I do include robotaxi. So for me, Tesla fair value around 300 when I actually valued it. But yeah, what about Arny's thoughts on that?
1 billion. How much do you think that is compared with his overall position?
Like
he owns 170 billion.
1%.
Yes,
it's like 1%.
So it's wild to think that 1 billion purchase, it could be a nothing burger, because it screams conviction on one side. At the other side, we know that is a bit of penny for him. But I would say, okay, it's still a good sign.
Yeah, but because you have to keep in mind, he doesn't have all that cash liquid.
Good point.
Like, he has his money tied up in Tesla. So him actually having that $1 billion liquidity to pump into Tesla, it is still meaningful, I think.
That's a good point.
Nvidia, by the way, getting a bit of recovery right here. Again, it was down off that China headline. Basically, I mean, it's down 50 cents. So looks like the China headline, not that big of a deal. Also, we got an update right here, folks, that there is an agreement, at least by one of the top trade negotiators from China. He has said we reached a framework agreement on TikTok, which that's probably also why Nvidia is pumping, because likely that means that Nvidia concerns maybe are not that big of a deal. Everyone's asking me to ask you guys about Grabby Grab. Emir and Arny obviously know that I've been excited about this name. Any just general thoughts about Grab?
I start because I've been to Bali for a month, and the only way as a foreigner you can survive when you arrive at the airport, when you move around, is by using or Grab or their competitor, Gojek.
Yeah.
As a company, I'm seeing they're doing the right stuff. It's quite fascinating to see that they're not just providing services as Uber back and forth. We are trying to develop more an ecosystem. But I believe to see that ecosystem, you need to be more a local. Because from the foreigner perspective, how I just cared of being transported from A to B. I need to be honest. I haven't seen any real difference in terms of like fuel usage, apart from maybe for scooters. I just preferred Gojek because the navigation engine worked better. But when it came for cars, Grab was the go-to. Also because on Gojek, drivers were allowed to do something that was so annoying. Like, you booked them and they were going in the other direction. For them, it was not convenient, hoping that you would have canceled.
Really?
Yeah. On Grab, that doesn't happen.
Yeah.
So that was my experience. I believe that's a very strong company. An interesting company is not really my piece of cake. So I think it's worth investigating if you have the time, if you feel involved somehow. What do you think? Is it?
Yeah, Amir, your thoughts?
I've not looked at it at all. I'm actually going to be doing a deep dive on Grab shortly, so I'll probably have a lot more to share about my thoughts and opinions on Grab in a little while. You guys will have to be patient for a couple of weeks here, and then.
Dude, this guy, when he told me this last night, and again, I will link his Substack for those that want to subscribe to it. There's a lot of Substacks that are out there in the finance space. Amir's is one that actually like writes real research, and I will explain how I was convinced of that yesterday. So when he does a deep dive for a company, he goes back to when they went public till today and calculates all their metrics inside of his Excel sheet. This guy does not use a data aggregator or a provider like S&P Global or NASDAQ to get the data. Like anyone would just be like, okay, I copy and paste the EBITDA, the earnings per share, but all from all these 10 years. He goes into every SEC filing over the past, if it's been public for 12 years, 4 times a year, so 48 filings, and manually inserts every number to make sure he has the most accurate results.
Yeah, because I noticed quickly that data aggregators, for one, they don't like do the KPIs for you. They summarize some like cash flow line items and stuff, so you don't really get full picture. And I don't really trust them. So the only way I can know the data is correct that I'm actually analyzing, that is when I do all the work myself manually. And unfortunately, it is a very tedious and time-intensive process, but that's the only way that you can guarantee quality in the numbers. And I know some of you guys hate the spreadsheet stuff, but it is only like as a basis. The main point when you analyze a company is still like the story. You have to understand the narrative. Like the model is just a reflection of the narrative at the end of the day. So a lot of people think that, yeah, because you sit in Excel, you just make some random assumptions and you get some random fair value. Like, no, that's not what we do at all. It is actually mostly focused on understanding the story. The numbers are just backing that. But yeah, it is.
But for someone to work that hard to make sure, and there's his Twitter right there, to get the accurate numbers, like before you even begin the deep dive, that's not even the deep dive. That's just getting like, it takes like 80 to 100 hours. I mean, that's.
Yeah, well, like I want to cry, and people are like, bro, can't you just like make a video about this company? I'm like, bro, do you know how much time I have to spend to have an opinion on this company?
Sometimes I also receive comments, oh, Arny, can't you just follow this company? It's like, do you have a sense how much time it takes to just have a broad opinion into something? Yeah. One thing is like, for instance, we've Grab before, I can give you a very general perception into, okay, I have a glance on the numbers, I have a really broad sense of the story, but my opinion is not valuable, to talk, but is not really valuable because I don't have expertise. An opinion matters when it is ingrained of deep study, deep awareness, and the only way to build that conviction into the idea is just doing a lot of work, like this work, putting the numbers, understanding the story behind each number. Yeah. That is the most difficult thing that is taken for granted, but that's where all the value really comes. It's not the Excel per se, is understanding the story that these numbers tell.
Yeah. So whenever you see me or Arny actually share some like thoughts on a business, you can know that we have spent like significant amount of time. It's not just like random. And, you know, sometimes I will give my comments, like I come on to meet, hey, Emir, what do you think about this? Like I will give like surface level thoughts, but they're not really based on anything. Like I don't have confidence in it. But when I post like a deep dive, when Arny does one of his threads or a deep dive, you can know for sure that we actually did thorough, deep work on that name and that we have some confidence in what we're saying. So yeah, sorry guys, but when you ask like, oh, can you just tell me what you think about this? Like I literally can't unless I spend a few hundred hours on it. So it's the boring part of doing the analysis. It takes a lot of time.
All right, so I got to get these guys some lunch and then take Amir to the airport. But overall, how's your trip?
Dude, thank you so much, Amit. I have to say, dude, one thing you guys don't know, I'm going to give you some insight that if you're only watching this stream, this is the only way you will know.
Okay, what is this? I'm curious.
Okay, so about Arny, he's actually a closet influencer in Italy. So I've been walking around the streets of New York with Arny. Dude, every 3-5 minutes he pulls out his phone, starts like yapping in Italian, recording some content like bellissimo, blah, 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 and then he will like post it and then just watch like the reaction to his post, and then he will make a new one. He's like, Emir, what does this thing mean in English? I don't understand. And I translate for him. He's like, oh, okay. So he's the most annoying guy to walk around the streets of New York, bro. The fucking influencer Arny. Go follow his Instagram. Give him some likes over there. For Amit, he's exactly like I imagined. Guys, imagine hanging out with Amit. It is exactly like you imagine. It's like this.
Okay, that's not exactly how it is, bro.
Dude, he is staring at his phone 24/7, bro. This guy has no attention span, bro. He's like, yeah, like he's not gonna miss a single tweet that goes out, bro. He's on it.
It's not 24/7, bro. It's just like when no one's talking and we're all just sitting. I take out my phone and
when
like,
we're talking, bro. Trust me, eating, shitting, fucking walking on the train, like meeting people, he's on his phone. Like whatever it is, the situation, he's on his phone. But I have to say, he's a good multitasker.
For good reasons.
Yeah. Look, he didn't get where he is today by being lazy about it, bro. He's he's checking the Grindr DMs. Yeah.
this is why I felt compelled to tell them yesterday. I'm not actually, because I was like, I know the chat. Like, I think you brought up the chat, and that's what triggered me to say it. But yeah, anyway, I took them home yesterday as well to see my parents. So they got to, Arny already met my mom and dad, but Emir got to meet them, and we got to chill with them for a couple hours. So look, it was a good weekend. It was fun. We kind of went out for the past 4 days and just had a good time and relaxed. And yeah, I hope to definitely do it again. And part of getting my own apartment was to have moments like this where I could invite people over, I could host them, and we could make some memories. So
yeah, thank you so much, Amit, for that.
All right, folks. Arny. How was your experience? Yeah.
Thank you so much for hosting us. I know you have your own way of sharing how much you care by filling the fridge.
Oh, can we post that?
No. That's for us.
Oh my god!
So I made sure they were taken care of. That's for sure.
Yeah.
Did you think this experience in New York was different from the last experience?
Yes.
You had longer time too.
Yes, and that's something I think is in general for travel. The first time you see something, you're more into just exploration mode. The second time you see that, or if you stay long enough, you start to have a sense of how the life is. So New York is interesting to visit. I'm realizing it's probably very good to live into if you are into certain dynamics, if you are really keen to enter into certain dynamics, because the reality is where I live is beautiful, but the center of gravity of the world is definitely not there. Here you have that sense of, okay, if I grind, if I go up to a certain point, infinite opportunities can emerge. Something like, oh, there is this guy coming to that event. Okay, in no time, I'm there.
Yeah,
that is so valuable. And also it allows you to make experiences like here.
Yeah. And again, I don't live in New York, but living close to New York is what makes it really fun, because you don't have to deal with the stress of New York, but you get to get access to the opportunities of New York, which are obviously very important. All right, folks, that is it. Again, Arny and Emir's Twitter, I'm putting right here in the chat. Emir also with his Substack, Type F, research.typef.capital.com. He's coming out with a report on Grab soon, which I think will give people a kind of case study on how hard he works. I can't guarantee it's going to be bullish. He might think it's a piece of shit company, but he'll come out with his research hopefully in the next couple of weeks, and you guys will be able to read it. And
guys, as someone who was literally doing that as a corporate job, doing analysis well takes so much energy and is so hard that I heavily encourage you to have a look at Emir's work.
Thank you.
I don't say lightly that someone is a good analyst and Emir is an exceptional analyst.
Yeah, and he works hard, dude.
Thank you so much, everyone.
He works really hard. So there it is. Research.typefcapital.com. Arnie's Twitter right there in the chat. My schedule is back to normal. So there will be a market close like normal today. And then for the coming, I think 3 months, there's not traveling. We will be market open, market close Sunday. I know we couldn't do the Sunday futures yesterday because we were out in New York. So we're going to be back to normal. We'll keep it going. And we'll see how we end out this year.
When even Amit says, okay, I'm a bit done traveling, doing around, I need to rest a bit.
Yeah.
He really means that.
Yeah. It is time. It's time to get back to the schedule. All right. Thank you, everybody. Appreciate it. Appreciate all the love and support. You got a bunch of people wishing you guys safe flights. And
thank you.
Yeah, I'll see you guys on the market
Ciao.
close. Bye, everybody. Have a good one.